Hi guys, I hope every one of you are using this 10 days time that is available properly, and today it's already 24th. That I am doing this particular revision is already 24th January. At least from today, in the coming 1 week, if you study perfectly, use the time perfectly, you can change your result. Even this 1 week, see, till the last minute you should never leave it. By the way, before I proceed discussing, comment below where are you watching from this, and don't forget to like the video. Please like the video and also share it to your friends. So by the way, the topic I'm discussing is what? Audit evidence, where the minimum weightage is 15 to 20 marks. And yeah, some students are asking, sir, when hard questions list for 4 more chapters were there, right? When the list is going to come? Maybe probably tomorrow I'll do one more live. So there I will give you the list. 25th January I'll do a live. Okay, there I'll give the list. So right now, let's stick to the topic audit evidence, which is one of the most important and high weightage chapter in CA Inter Audit. See, in CA Inter Audit, audit report is one high scoring chapter. 2, audit evidence. 3, audit strategy chapter. Okay, items of financial statements chapter. Risk assessment chapter. Then you have completion and review. These are all the weightage of the chapters in the order in which the weightage is there. So in the order of weightage I told you. So the second highest weightage in the CA Inter Audit is audit evidence, which actually has 8 standards, guys. Guys, just a 2.5 hours video. Within this 2.5 hours video, this chapter, the core content I'm going to cover. First I'm going to discuss 501, then 501, 550, 510, 610, 500. 500 also I'm going to cover. 2 more standards were there in this chapter: sampling 530, analytical procedure 520. In this particular session I'm not covering that. Maybe if time permits I will do later those 2 standards as well. But remember, these 6 standards together, you know what is the size of the book? These 6 standards put together, what is the size? That much will be those 2 standards. And guess what? These 6 standards put together, 15 to 20 marks weightage minimum will come. 15 to 20 marks high scoring possibility is there from these 6 standards itself. So even in the worst scenario, 12 marks will come only from these particular 6 standards. So first let us cover high scoring topics within audit evidence chapter. Then we can discuss about 530, 520 later. And somebody is commenting. So please, whatever the doubts you are having also while you're watching, please comment in the live, and I will be trying my level best to reply also. And so these 6 standards, by the way, 500, last one that we are going to discuss in this video is 500, where audit evidence is a standard, where we are also going to discuss about 2 more concepts: assertions and audit trail. Very soon I will take 1 more live session where items of financial statements I will be revising. For that, this assertion topic is most important. So kindly watch till the end of this particular live is over without a failure. I'm telling you, these 6 standards, even if you are watching for the first time now, I will make it in such a way that you understand the impact of all these 6 standards thoroughly. You will not forget after this live. These particular 6 standards you will not forget. I will be discussing about what are the key points in the standard, important points in the standards, all that I'm going to discuss. Now, it is the latest marathon, guys. Whatever the 6 standards I told, right? This is the latest marathon, which till now I didn't post on the YouTube. I am posting it as live right now. I'm streaming it live. It's not that I'm taking in live right now. Just these 6 standards were recorded by me in the past 4-5 days. No. Past week, before I start my CA final audit batch, no, before that time it was recorded. When I'm taking CA Inter new 2026 version class, no, there as and when a chapter is over, I will do a detailed revision of this particular topic. So there I did that, and I'm telling you, fantastically the revision came. Approximately 2.5 hours, these 6 standards put together. The kind of clarity that you get is amazing. So that itself, I thought of releasing this for May attempt as a new marathon, but decided to post it for our students who are writing January exam directly. Now, so I will be there. I will be in the live itself throughout the session. Whatever replies you're commenting, I will be sitting and replying you. Don't worry at all. So it is just like a pre-recorded session, now streaming live. So that's it. So I wanted to be transparent, so that's the reason I'm just giving you the information. And you need to download some PDFs. You just go to our website. So go to our website, just a minute, sreshtaforcacma.com. You just go to our sreshtaforcacma.com. There are some resources that you can use it. Go to free resources. Here auditing is there, right? You just click that particular auditing. You will get goat notes PDF, question bank PDF. Then apart from that, you open this expected question survival plan folder. You have expected questions, exceptional question bank is there, all that is there. It will be very, very useful to you guys. That's it. So why late? Let's continue the marathon. Let's begin straight away with essay 505. Okay, continue watching. Always when you're preparing for the next time, when you're reading the subject next time, first always observe the structure of the standard at first. First always, whenever you're revising, observe the structure first. Don't directly start read from the first page and first line of the standard. First observe the structure of the standard, what standard briefly tells you. For example, if you see the essay 501, it first talks about definitions. What is external confirmation? What are the methods of request for external confirmation? Like that, some definitions were there. I'll come back to it. Then we have external confirmation procedure. What is the procedure for external confirmation? Then we have, what if management refuses to do external confirmation? Then we have evaluation of evidence obtained, or evaluation of result of external confirmation. See, once we do external confirmation, we get some information, some evidence. So evaluating that evidence, nothing but evaluation of evidence obtained in external confirmation. That's it. Only 4 topics were there. Understood? Now first let us look at the second topic, steps for external confirmation. What are the steps involved for external confirmation? Now, there are multiple ways through which we can get evidence. One is inquiry. We can ask, what is audit evidence? We already understood many a times what is audit evidence. Information required by audit. Whatever information the auditor is asking for, that is audit evidence. So inquiry is one method through which I get evidence. Inspection, another way is inspection. Physically I'm going and verifying or checking the documents. That is another way through which I get required information. Then we have analytical procedure, recalculation, reperformance. Then we have external confirmation. So external confirmation is one of the method to obtain audit evidence. For example, whether sale happened to a particular customer, is it genuine or not? I can obtain evidence by looking at sale document, transit challans, GST bill. All that is enough for me. All that will give me evidence that yes, sale happened or not. Not only this, I can directly contact with the party and ask a confirmation whether sale happened or not to him. Yes or no? So that is external. So what is external confirmation? So external confirmation is a direct response to the auditor. Even the standard, first and foremost important definition is definition of external confirmation. What is external confirmation? External confirmation is a direct response to the auditor in writing. It's a direct written response to the auditor in writing by the third party. We also call the third party as conforming party. We also call them as what? Conforming party, either in paper form or electronic form or some other medium. So this is the meaning of external confirmation. So directly third party has to conform to the auditor. Suppose if the third party is conforming through mediator, suppose if the company is asking third party, getting the data and then giving it to me, that is not external confirmation. Able to understand? See, in audit, we have essay 500. Inside that, evidence is based on source 2 types. Internal evidence, external evidence. Evidence is 2 types. Internal evidence, external evidence. If evidence is generated outside and that evidence we are using, that is external evidence. External evidence need not be external confirmation. We need to be clear. External evidence, for example, GST paid. What is the proof for GST paid? Challan will be there. GST challan will be there. Who will give the challan? Is our organization prepare the challan? GST department will give the challan. GST department will give the challan. That's an external evidence. Suppose I have a doubt on the challan, is it original or duplicate? Is it a dummy, forged document or real document? I have a doubt. I will open GST website and type the challan number and see whether this challan is original or not. Now what I am doing is external confirmation. Are you getting the point? So external evidence is different, external confirmation is different. Fine. What are the steps involved for external confirmation? So first of all, generally in any organization, for what and all auditor can get external confirmation? For liability items, loan balances, loan outstanding amount, any borrowings from related parties. There we can do trade payables, debt, creditors. Then coming to asset side, investments made in various entities and trade receivables, debtors, inventory lying with third party. For loans and advances given to related parties or third parties, for all these cases we can get external confirmation, right? Yes or no? Now what are the steps involved in that? First to know, determine the information. Determine the information for which you want confirmation. First identify the information. Determine what information you want. Then identify appropriate conforming party. Identify appropriate conforming party. So who is the conforming party in the third party? For example, the information I want is debtors. I want confirmation for debtors outstanding balance as on balance sheet date. As on balance sheet date, debtors were there in the organization. I want confirmation for outstanding balance, how much. So debtors I decided. Now I will decide about, in these debtors, I selected 20 debtors. In these 20 debtors organizations, some accountant or finance manager, somebody will be there in that organization who is knowledgeable about this matter. We call him as conforming party. Determine the appropriate conforming party. Who is the right party in that organization? 3, design the request. What is it? Design the request. Now see, how do you get the confirmation? Only when you send the request. Am I right or not? Step number 4, you need to send the request. You need to what? Send the request along with follow-up request. Now you need to send the request, right? Before sending, first you need to design the request, right? While designing, we have some points to consider. First of all, you can design in 2 format external confirmation request. One is positive confirmation request, negative confirmation request. One is positive confirmation request and negative confirmation request. What is a positive confirmation request? Where I write the letter like, I am the auditor of so and so company. We are at the conclusion stage of the audit. We found that in our books of accounts, you are a debtor for our organization and the balance outstanding is 10 lakh rupee. We mentioned that, and we will ask the third party, please confirm whether you agree or disagree. We will ask him whether you agree or disagree. Now third party has to reply me within 3 days. Whether he agree, he has to reply, or even if he disagree also he has to reply with the information provided by me in the request. Request I am sending, right? In that request I mentioned some information. With that information, either he has to agree or disagree. Both he need to reply. Whereas negative confirmation request, he will reply only when he disagree. In a negative confirmation, I clearly mention, reply only if you disagree. Ignore otherwise. I will mention like that, and that is called negative confirmation request. So that is designing of the request. Now in the actual GoTo notes, we have given some points for designing of the request. We have given certain points. When you are designing the request, there are some points that you should keep in mind. Assertions. What assertion you are addressing? Are you checking existence of the balance? Are you checking rights and obligation of the balance? Are you checking completeness of the balance? Remember, external confirmation will give evidence only for rights and obligations. It will give evidence regarding existence and completeness, but external confirmation will not give evidence about this assertion. Valuation, you don't get any evidence on external. Okay, and what is the risk of MMS involved, including risk of fraud? Generally, when we are designing the request, we also consider how much risk is involved. Layout and presentation of the request, what format you are using, presentation. Sometimes we mention the amount and send. Sometimes we ask them to mention. In a positive confirmation request, again 2 types were there. We mention the amount and then ask them to confirm just yes or no. Sometimes we put a blank and ask them to fill it and send. This is called layout and presentation. and past experience on similar audits, method of communication. This is also one of the important matter. When you are designing the request, are you sending through a mail? Are you sending through a WhatsApp? Are you sending through a post? What exactly? Then management's authorization for the conforming parties to respond. Another important factor is how management is pushing them, because without management's authorization they will not reply. That is why when we are sending external confirmation, we will not send directly from our mail ID, we will send it through company's mail ID, and we will ask them to reply directly to the auditor. And ability of the confirming party. In the third party organization, we are asking him to confirm some data, right? He has that authority. Suppose we are asking to accounts manager of the debtor. In the debtor organization, accounts manager don't have this power to confirm. So look at that also. All these factors you need to take into account when you are designing confirmation request. Are you clear? Then you need to send the request. Send the request, including follow-up request if it is necessary. And further, make sure the request is properly addressed. Means in the request, you are sending the request, right? Mail ID should be correct. If at all you are sending by post, address should be correct. But before even dispatching, before sending, validate the address. And further, additional request you send, follow-up request you send, if at all reply is not received. Generally, where we will wait for the reply? Positive confirmation request, we wait for the reply. Yes or no? If they do not send the reply within the time mentioned by us, we will have to do a follow-up request, right? Then, and use positive confirmation request for more reliable evidence. Use positive confirmation request where you do not mention the amount outstanding, but requiring the confirming party to fill the details. In a positive confirmation, if you are following, to make sure it is more reliable, send request asking him to give the details about the transaction, about the balance, like that. Yes or no? You don't put the amount and ask him to confirm yes or no. Better ask him to give the details. But this will reduce response rate, because extra effort is involved. If at all you mention the amount, everything, and ask him to confirm yes or no, it is easy for him. If you ask him to fill the details and send you, it's little time taking for him. Are you clear? That's it. So these are the 4 steps involved. And remember, the auditor, the external auditor, shall maintain control over external confirmation request. Are you clear? And information, first information we need to decide, right? First, which information? Generally, we all think that external confirmation, we use it only for account balances and their elements. We generally think that external confirmation is used only for balance sheet items, balances, outstanding balances as on balance sheet. That's what we think. No, you can get confirmation even at some other date also, not an issue. You can get confirmation even for non-financial data. Non-financial means what? We can also use this to confirm terms and conditions, terms of the contract, terms of the transactions. We can also use external confirmation whether any terms are missing. Absence of condition. Suppose we gave a loan to some party, or we took a loan from a related party, they are not charging any interest. Even in the loan agreement, interest point is not there. I am doubtful whether they are really charging interest or are they giving exemption. Clear? These are the steps involved. Now tell me, what if positive confirmation request? Positive confirmation request is a request where the third party respond directly to auditor. Either agree doing it or disagree with the information I requested, or third party will be providing the requested information. Negative, he will respond directly to auditor only if they disagree with the information in the request. Sometimes, they won't respond. There is another definition. Totally 5 definitions are there in this particular standard. All the 5 are very important. There is a non-response. In non-response means what? Suppose I sent a request to him, he responded, but not fully whatever I am asking. Failure to fully respond, or a failure to respond. So he didn't respond at all, or he didn't fully respond. Both are non-responses, but there is third point. Suppose your request was undelivered, means it didn't deliver him. It was returned to you, or may not returned to you, doesn't matter. It was not delivered. Even that is also treated as non-response. This point they can ask as an MCQ. Because many students, non-response means third party is not giving response, only that they will think. But you sent a request, right? It returned to you without delivery. Even that is also forming part of non-response as per the SA 505 definition. Are you clear? Now tell me, once I do this external confirmation procedure, generally what I get, once I sent a confirmation letter, third party will reply. Suppose I mentioned in our books of accounts, debtors outstanding balance is 10 lakhs because of so and so transaction. I mentioned also. And the third party replied, sorry sir, in our books of accounts as on 31st March, outstanding balance is only 5 lakhs, is it? He said only 5 lakhs, whereas in our books it is 10 lakhs. He replied 5 lakhs. Can I directly conclude my client books of accounts are materially misstated? Can I directly conclude, in our books it is 10 lakhs there. In third party books it is only 5 lakhs. He told it is 5 lakhs. Just he told, sorry sir, in our books it is showing 5 lakhs. Can I straight away say, hey management, you are completely wrong. Your books of accounts are materially misstated? Can I directly say that? No. Now, when the confirming party replied, there is a difference between amount to be requested. There is a difference between the information to be requested and the information provided by third party. There is a difference now. You can't straight away call it as misstatement. That is actually called as what? Exception. What is it actually called as? Exception. Exception means what? It's a response from third party, correct? Where there is a difference between information requested by auditor and information provided by confirming party. If there is a difference between information that we requested and information that is provided by the confirming party, and that is called exception. When exception is there, what auditor has to do? Analyze it and assess for its impact on the entire population and financial statements. Assess it, check it, see whether there is a misstatement in our books of accounts or maybe third party books of accounts, or who knows. Are you clear? Then sometimes, and by the way, finally, and there is one more element. I only told four elements. Negative confirmation request where you can use. That also I'll come back. Okay. Now, for example, he sent a reply. Finally, how to evaluate the result of external confirmation procedure. Evaluating the evidence obtained. This itself can be asked as a 5 marks question. Steps for determining external confirmation request. This itself can be asked as a 5 marks question. External confirmation procedure. The procedure can be asked as a 5 marks question. Now look at, how to evaluate the evidence. See, ultimately, once you perform external, you need to check whether you got evidence that is reliable and relevant or not. Auditor has to evaluate whether he got reliable and relevant evidence through external. If at all you are not getting it, perform further procedures. Now tell me, what are the results? How external confirmation, when you perform, you get some result, right? You can classify the results into following categories. For example, there are 1,000 customers for the company, 1,000 debtors. To all the 1,000 debtors, some 30 of them we sent positive confirmation. Remaining 70 we sent a negative confirmation. Yes or no? Now the result is there, right? Once after 1 week is over, I will categorize the result of confirmation to following categories. 1, agreement. Third parties replied saying, yes sir, everything is matching. Another one, exception. Third party is replying saying, sir, in our books of accounts, the balances are different, sir. In your books of accounts, the balance is different, sir. Exception. This is 2 categories of result. Or there may not be response at all. Third party might not have responded. Or third party responded where the response is unreliable. For this, one simple example I'll tell you. We sent a confirmation request. Third party replied also. But when I see the GST number, it should have 15 characters, but there 14 characters only were there. Immediately I got it out and I started researching about the client GST number, all that, the third party GST number. It was not found at all. Somewhere I felt this particular debtor is doubtful. In the sense, it is not reliable. Some dummy transaction is there behind that. So we have to investigate that. So a response indicating, unreliable response. 4 categories. External confirmation result will be categorized into 4. Exception, agreement, response, no non-response, doubtful response. Are you clear? Finally, suppose if management is refusing external confirmation procedure, the auditor inquire reasons and also ask evidence for those reasons and try to perform and also check how the refusal impacts the risk of MMS, including risk of fraud. Is the refusal leading to a risk of MMS? Is it because of, is there any risk of fraud involved? Because of this refusal, I may not discover a fraud. Generally, why management refuse? There might be some legal dispute going on or some negotiations going on. Untimely, if at all at wrong time, if auditor is sending confirmation, that might affect the negotiation proceedings. Clear? Next up, perform alternative. Since, see, one of the objective why you are sending external, you want to get an evidence whether third party is really owing us this much or not. Whether are we owing him this much or not. We want to get an evidence. Try to obtain it to alternative route. Suppose if management refusal, it's completely illogical, unreasonable, and you are not getting reliable evidence through alternative methods. Okay. Then the auditor must communicate the matter to those charged with governance and see whether there is any fraud risk factor. Consider the implications, including modified opinion. See whether modified opinion is required as per 705 or not. That's it. Easy or not? Then there is one more aspect. At the beginning I told you, so what are the external confirmation? Definitions over, procedure over, management refusal over, evaluating evidence is over, right? Then negative confirmation request. Now by the way, I told you, right, negative confirmation request means only third party will reply only when he disagree. Now between positive confirmation and negative confirmation, which is superior? Straight away positive confirmation, because in a positive confirmation request third party will reply at least. Even whether he agree, he'll reply. If he disagree also, he'll reply. If at all he didn't reply in the time limit, I will follow up until he reply. So in a positive confirmation request, I will not take any conclusion without his confirmation. Whereas in negative, what confirmation I will take? If at all he reply that he disagree, well and good. If we do not reply within next 3 days, suppose we sent a confirmation. In that we mentioned, we sent a confirmation request. In that we mentioned, we will await for 3 days. Non-receipt of reply within 3 days, we assume that you are agreeing with the balance. We assume that you are agreeing with the balance. Here, if the third party do not reply, you take an assumption that everything is matching. But here there is a flaw. For example, third party, the mail that you sent in external confirmation, it went in spam box. Third party mail ID, it went in spam box. It detected our company mail address as a spam. And it went in spam box, and third party have not seen it, and that is the reason he didn't reply within next 3 days. But actually with that data, there is a difference between what is there in his books of accounts and what is there in our books of accounts. And if you investigate, if at all you investigate, it's actually big mistake in our books only. But this entire incident we cannot discover through NCR. Why? Because we used NCR, he didn't reply. What we assume after 3 days? Everything is matching. Is there any explicit confirmation from third party that everything is matching? No. Is there any explicit receipt by the third party? No. Do we know whether he received it actually or not? There is no evidence. That is why negative confirmation request is dangerous. It's not suitable everywhere. So negative confirmation request is less persuasive than positive confirmation request. So can we use negative confirmation request as one of the substantive audit procedure? No. Unless 4 conditions are satisfied. Unless all the following 4 conditions are satisfied. Many a times this was also asked. Remember this management refusal point, they can ask even directly as a 5 marks question. Negative confirmation request, 5 marks procedure, 5 marks. Clear? Negative confirmation request as an audit procedure, 4 conditions has to be satisfied. The risk assessed is low. Low risk is assessed, and you have an evidence regarding operating effectiveness of controls. Second one, population includes many small homogeneous balances or transaction. You can also call it as large small items. Large number of small homogeneous transactions or balances. Low exception rate. When you are expecting low exception. Exception means what? The difference between our information and third party information. If there is a difference, that's called exception. The possibility of exception is low. Exception rate is low. For example, I am sending confirmation with one debtor, right? Last week only our organization already confirmed with him. Everything is matching and there is no new transaction entered. Even if I send now the confirmation as an auditor, the amount is going to be same. There won't be any difference. Low exception rate. If there are no conditions where recipients will disregard. Suppose third party 100% will reply if something is mismatching. Okay, he will for sure see the mail. He will for sure see the mail which I am sending. So if I have that certainty, you can happily send the NCR also. So generally, suppose in a client, if 3,000 external parties were there, for example, 50 are very material. For 50 we will send PCR. For remaining 2,950 we send NCR. So that all 3,000 were covered. To these 2,950 customers and suppliers, we send NCR. If at all anything, any of them want to disagree, they'll reply for sure. So that's it. Are you clear? With this 505 standard is over. That's it. Hardly 23 minutes. Entire standard we covered. So what is the structure of the standard? We need to cover definitions, 5 definitions. External confirmation means what? Positive confirmation, negative confirmation, exception, non-response, 5 definitions. Then steps for performing external confirmation procedure. Then we have when negative confirmation request can be used as an audit procedure. Then we have this one, management refusal. Finally, how to evaluate the result of the external confirmation procedure. By the way, sometimes to negative confirmation, we didn't receive any response. How will you interpret it? Generally, what we assume, everything we assume it is matching. If third party do not reply, we assume it is matching. But remember, he is not explicitly confirming it. He is not explicitly confirming. A non-response does not explicitly confirm. receipt by the conforming party or accuracy of the information, yes or no. Accordingly, they provide less persuasive evidence than positive. In a positive, no, I will get more convincing factor. I will have more satisfaction because he will reply that yes, agreed sir, matching. In a negative, I will have a less satisfaction. Persuasiveness means what? Convincing. Less satisfaction or more satisfaction. NCR will give you less satisfaction in terms of reliability of evidence than positive confirmation request. Over. Are you clear? Yes or no? That's it. Predominant main standard, main theme of the standard we completed. 505 over. Confident? Easy? Yeah. So now let's discuss SA 501 revision. What is SA 501? This 501 standard also talks about audit evidence, but there is an extension to the heading. It's not just audit evidence, it is specifically dealing about 3 items. So specific considerations. What is the standard heading? Specific considerations about selected items. Specific considerations about selected items. What specifically auditor has to consider regarding selected items? What are the selected items? They selected 3 items: inventory, litigations and claims, and third one, segment information. So they have selected 3 items. One is inventory, litigations and claims, and segment information. What auditor has to specifically consider? Inventory, existence and condition you should consider. You should consider 2 assertions, existence and condition. Whereas litigation, you should consider the assertion called completeness of accounting and disclosure. Completeness of accounting and disclosure of litigations and claims. Third one, segment information, presentation disclosure as per applicable financial reporting framework. What auditor has to specifically consider? Existence and condition of inventory, completeness of accounting and disclosure of litigations and claims, presentation and disclosure as per applicable framework of segment information. These are the 3 items that we need to select, and for these 3 items we need to consider these items. Are you clear? Now, exactly. Now, what is segment information? We all know segment information means a company dealing with different products or services at different geographical locations. That is what segment information. First, we will understand segment information. What auditor has to perform here? What auditor has to perform audit procedure? First, to know, understand methods used by management for identifying and reporting segment information. What methods management is using? Test those methods. What is it? Test those methods whether they result in applicable financial reporting framework compliance. What is it? Test those methods to know whether the management methods, will they give segments, reportable segments in the same way as per applicable framework. See, you have in accounting standard some testing methods to identify segment reporting. So management here in the company that you are doing audit, they did some segment reporting. Now they used some methods of testing. So some methods to identify, you take the same methods and test whether you are getting same reportable segments as per applicable framework. Also check it out, cross check with applicable framework. As per applicable framework, if I apply those methods, how many reportable segments coming? For example, 6. Management also used testing methods, use those testing methods, you are getting 6. So that means the testing methods used by the management are resulting in segment information same to applicable framework. See, with respect to segment information, what auditor has to get evidence? Auditor has to get a sufficient appropriate evidence that the segment information presented and disclosed by the management is appropriate. We need to get an evidence that segment information presented and disclosed by the management is appropriate as per applicable financial reporting framework. That evidence we want. For that reason, what am I checking? What methods management use? We are trying to understand. We are testing those methods. And third one, we do analytical procedure, like we compare with prior period, all that. Are you clear? Now, the standard also talks about one more element. When you are making that understanding, suppose you are understanding the methods used by management, for that we'll look at the book. For understanding the methods used by the management, you see, the auditor has to obtain sufficient appropriate evidence regarding presentation and disclosure of segment information. Is it in accordance with applicable framework? Understand the methods of the management, test those methods, perform analytical. You don't have to give any opinion. By the way, just because you're doing this, there is no requirement for you to give opinion separately on segment. You have to give opinion on the overall financials only. Now, when you're understanding those methods, there are some matters that you should take into account. Now, when you're understanding segment information, is it presented and disclosed correctly? What methods management used? Pay attention to, are there any sales and transfers happen between segments? Sales and transfers happen between segments. Compare with budgets and expected results. Segment information as per budget, how much is there? As per actual result, how much is there? How assets and cost is allocated between segments. Compare how far the allocation methods, everything is consistent with prior period, and if at all there is any inconsistency, there is a changes in asset allocation, there is a changes happened compared to last year, whether the changes were disclosed correctly or not. Are you clear? This is the audit procedure. Now in these two put together, a 5 marks question can come. Even when they ask understanding of management methods, first you write audit evidence about segment information, then understanding of methods you write. Sometimes in exam they will only ask this point, but it's a 5 marks weightage question. You should write both. Are you clear? That's it. One of the element is over. Then second selected item. What is the second selected item? The second selected item is audit procedures regarding litigations and claims. What is the second selected item? Litigations and claims. Correct? Litigations and claims. What auditor has to check in this litigation and claims? In the litigation and claims, auditor has to check completeness of accounting and disclosure. The company is facing, the company that we are auditing is facing with so many litigations and claims, whether the company, nothing but management, whether the management accounted all the litigations wherever our client is involved, and sometimes it requires accounting in the balance sheet and P&L, sometimes it just requires disclosure. For example, if the litigation and claims involves in a real liability, there might be a outflow for sure, then that might be a real liability or a provision. No, it's a remote liability, there is a remote possibility, then it at least requires disclosure as contingent liability. The auditor has to check whether the organization completely accounted or not. For that, what auditor has to do? First, auditor has to inquire management. What is the audit procedure for litigations and claims? They'll ask you straight question, 5 marks question. First, inquire management and legal counsel. Inquire management and internal legal counsel. More specifically speaking, internal legal counsel. Company might have internal, their own lawyer, their own, like lawyers will be there. Retainers, we call them as legal retainers. The company will have own retainers. So ask them, internal legal counsel, are there any litigations? 2, check minutes of meetings of those charged with governance and meetings of legal counsel, meetings of management, meetings of shareholders. Look at the meetings, look at various minute books of various meetings. Through that minutes you will understand, is there any discussion about litigations and claims? Third one, review. Company will have legal expenses account, right? Legal expenses ledger account, right? Review that ledger account. You might get data about some litigations and claims. Now look at some litigations and claims, you might get evidence. Then use risk assessment insights. Management might have performed risk assessment, auditor also would have done risk assessment, right? Use that insight. Okay, whatever you understood about risk assessment, use that. And sometimes you may have to even communicate directly with external legal counsel. Sometimes you also have to communicate with external. By the way, we also check correspondence with external legal counsel when we are doing audit procedure to identify litigations and claims. First, we should try to identify our level best, what are all litigations are there. For that, we need to inquire management, internal lawyers, we need to look at the minutes of the meetings, we need to check the discussion happened between our company and external lawyers, yes or no, and we need to check the legal expense account, we should check risk assessment, we should take the data that we obtained in risk assessment. All this you try, you will identify where and all pending litigations are there, pending claims are there. There are some circumstances where you may also have to do 505 with external legal counsel. What is 505? External confirmation, nothing but direct communication, direct confirmation. So do a direct communication with external lawyers to know what are all the litigations. Now, direct communication with external lawyers. When you will seek this, when you will go for direct confirmation, if at all audit procedures indicates some other litigation might exist. Company disclosed to you already 20 cases, pending cases against the company, but you felt there might be more cases involved. So that time you communicate with lawyers. And also risk of MMS is identify. If you feel that some material misstatement risk is possible, suppose in the company, when I ask them the question, what are the litigations and claims that are dealt with the external lawyers, they are doubtful answering. Yes or no? So I felt definitely some risk of MMS, risk of fraud, risk of error is there. Communicate with them, external lawyers. Are you clear? Or if you think external legal counsel is dealing with some peculiar cases which is not recorded in the books of accounts, which is not recorded to you, which is not disclosed to you, you know that you feel that external lawyers can give you some additional data, communicate with them. So two circumstances, risk of MMS exists, two audit procedures suggest, indicates some other litigations might exist. In these two cases you communicate. How do you communicate? You communicate through letter of inquiry. First of all, you try to ask them through a general letter of inquiry. Sometimes general letter of inquiry, third party lawyer may not reply. That time you use specific letter of inquiry, letter of specific inquiry. What is letter of general inquiry? What is letter of specific inquiry? Suppose, look at general inquiry example I'm telling you. So we write a mail to the lawyer. External lawyer will write a mail like this: sir, we are the auditors of so and so company. We as a part of audit, we found that you are dealing with some cases, litigations and claims relating to our entity. Can you please give the list of litigations that you are handling related to our company? What is the status of the same? How much amount involved? I'm asking him to give complete information about what he is transacting with the company. This is general inquiry. Now, some lawyers know it is unlikely that external legal counsel responds in case of general inquiry. If external legal counsel does not respond or they are unlikely to respond, then auditor shall use letter of specific inquiry. Suppose I sent a general mail like this, then the lawyer office replied us, sir, we will not reply to this general mail, sir. If you want to know about any specific case, please mention that. We will confirm what is the status of the case. So that's how they replied us. Then now I will send a letter of specific inquiry. Then I will write, sir, we are the auditors of so and so company. We found that your legal firm is handling the following cases as per the information given by management. You are handling 7 cases. And the amount involved is this. Management's assessment is this. Management is saying 2 are real liabilities, sir, 5 are contingent liability. This is what management assessment is. So please confirm whether the information as shown above is complete and correct, and management's assessment is complete and correct. Please reply if at all this is incorrect or incomplete. I will ask them. Now specifically I'm mentioning the cases and then asking them, which will be easy for them to reply. Look at now, in case of specific inquiry, mention the list of litigations. What is the management's assessment? What management is saying on that? And request the lawyers, request the external legal counsel to confirm management assessment and provide further information if the list is incomplete or incorrect. This is specific inquiry. Are you clear? Now this direct communication, this itself can be asked as a 5 marks question straight away. It was tested once. Next, what now? There are some occasions where forget about direct communication. We want to meet them. So under what circumstances auditor will meet with external legal counsel? The auditor in some circumstances may judge to meet. So what are the circumstances? When the matter is a significant risk, when the matter involves significant risk, or the matter is complex, or management and legal counsel, they are disagreeing on certain issues. I want to know exactly what further. When they're disagreeing with each other, what I have to do? I'm doubtful. So I want to know what exactly the lawyer is saying. Next, suppose if management refuses, management is refusing to directly communicate with them, management is refusing the auditor to meet them, or they permit it, but they are not responding. External ELC does not respond. And in all these cases, you try to obtain evidence through alternative method. If you are unable to obtain evidence through alternative, which means I'm unable to communicate with them, I'm unable to meet them, they are not responding, I'm not getting evidence in alternative methods also. Regarding litigations and claims, I am doubtful. I do not have proper evidence. Then I will modify my opinion as per 705, where I will give qualified or disclaimer of opinion. Am I right? In the audit report, we have seen clearly evidence not available means either qualified or disclaimer. Some students will think adverse here, wrong. Are you clear? That's it. Next. So that's it regarding audit procedures regarding litigations and claims. There is a 5 marks possibility on this. Then we have inventory. The first item is what? Inventory. Okay. The first item is inventory. The auditor has to obtain sufficient appropriate evidence regarding existence and condition of inventory. Now here, inventory means the moment when you think of inventory, there are two circumstances broadly. Inventory lying with third party and inventory lying with the entity. Correct? Inventory lying with the entity or inventory lying with the third party. First we will look at how to obtain evidence, sufficient appropriate evidence regarding existence and condition of inventory lying with third party. How do you get the evidence? 1. Request confirmation. Yeah, request confirmation as per 505. Ask him to confirm regarding quantity of inventory and condition of inventory. Request the third party directly to confirm to the auditor directly regarding quantity of inventory, how much is holding, what is the condition of holding. If possible, you inspect the inventory. Second, if at all you're not okay with confirmation, you're not ready for confirmation, you directly inspect or perform other audit procedures. What is it? Perform other audit procedures as appropriate in the circumstance. Either you inspect directly or perform other audit procedure. Sir, what do you mean by other audit procedure? What do you mean by other audit procedure? There are 4 circumstances they told. Other audit in exam they can ask you, an MCQ they can ask you, what do you mean by other audit procedure? They'll give you options and then ask you to select. Or they will ask you direct descriptive question, 5 marks question. What do you mean by other audit procedure? If inventory is lying with third party, one option is request confirmation. Second option, you directly go and check it. Or other audit procedure. What do you mean by other audit procedure? What do you mean by other audit? Look at this revision. Look at this material. So if inventory is lying with, if the inventory is under the control of third party, if the inventory is under control of third party, if the inventory is under custody and control of third party, which is material to the financials. Remember, we should obtain evidence only when it is material to the financials. In the recent Jan 26 CA final audit exam, they tested one MCQ where inventory is not material. And audit also could not get proper evidence. What auditor has to do? They gave 4 options. Disclaimer of opinion, qualified opinion, something like that. And one option is unqualified opinion. The answer is unqualified opinion. We should ignore this because in the question which they tested, inventory is not material to the financial statements. It is immaterial inventory. We don't have to perform this procedure. Are you clear? In SA 501 applies only when inventory is material to the financial statements. That inventory point is applicable only when it is material to the financials. So we should give unmodified opinion if the inventory is immaterial and we are not getting evidence on that. It's immaterial item first of all. So no need to worry about it. Are you clear? So fine, if inventory is material and lying with third party, auditor has to do 2 key procedures. What are they? Request confirmation or inspection or perform other procedures. What do you mean by other procedure? Look at the documentation such as warehouse receipts regarding inventory held by third party. Third party received inventory, right? What is the proof that we have? And attend third party physical inventory count. Third party will do physical inventory count, right? Periodically he will do, just like our organization they will also do, right? Whenever they are doing, try to attend or arrange another auditor. If you are not able to attend, arrange another auditor or obtain report from another auditor. Like for example, you sent another auditor, right? Get a report of him or obtain service auditor report. Service auditor report, best example I told, you know, Amazon example you can take. What is Amazon example? For example, Hindustan Unilever is there. Many of the goods that they manufacture, they are not storing in their warehouse. Now they are storing in Amazon warehouse. Yes or no? Directly they are listing their products in the Amazon website and Amazon is selling it. And Hindustan Unilever will get back the money after commission. Now the goods they are storing in Amazon warehouse. Now here Amazon is service organization. Okay. Now, whether Amazon is maintaining the inventory correctly in proper condition, whether their inventory management is proper or not, Amazon will appoint one service auditor. He will give an audit report called service auditor report. That audit report, as an auditor of HUL, I am an auditor of HUL. I am checking inventory of the HUL. Some of the HUL inventory is lying with Amazon. Now I want to know whether inventory held by Amazon is properly held, condition proper or not. I want to know. Understood? So how do I get one way is I can ask confirmation with Amazon, request confirmation with Amazon. That is one option. Second, I will directly go and verify with the Amazon. Second option. Third option, I will inspect what is the proof that Amazon is having, and I will attend if possible Amazon physical accounting, or I will obtain Amazon's service auditor report, where the auditor is talking about control set third party inventory management in the Amazon, how the controls regarding inventory. Service auditor is giving me a report. That report I can use. These are other audit procedures. Sometimes inventory may be held as, pledged as collateral, then request confirmation from other party where inventory is held as collateral. These are all other audit procedures. Are you clear? When the inventory is lying with third party, you got it reasonably? Next, then now what if inventory, I told right, again the other inventory is what? Inventory lying with the entity. What auditor has to do if the inventory is lying with the entity? Very simple. When the inventory is material, the auditor must obtain sufficient appropriate evidence regarding existence and condition. Remember, an MCQ can come. SA 501 is dealing with existence and condition only. It is not dealing with valuation. SA 501 is only focusing on existence and condition. When inventory, suppose if auditor is visiting godown, if an auditor is visiting inventory physical verification, what auditor is primarily concerned about? He is concerned only about existence and condition. Valuation is not worried. He will anyhow check valuation as per accounting standard too. He has to check valuation anyhow. I will check, but I am concerned about existence and condition. Are you clear? Now, if inventory is lying with the entity, with our management, what auditor has to do? You attend physical inventory count performed by management. Management will do physical inventory count rate periodically. You attend there. What you will do there? After attending, how management instructions and procedures are? What are the management instructions for inventory physical taking? Remember, you are not performing physical count here. Management is performing. You are only going there just to observe how the management is performing. If possible, check the inventory to know its condition. And test count you perform test count means what? For example, management, one of the person, he says he just climbed that one particular rack and says 40 items are there in a particular box. You just go and check whether that box really has a 40. Here what are you trying to test? You are testing the test of the management, whether management counting is properly doing or not. That's it. So these are the 4 procedures auditor has to perform. 1, evaluate management instructions on controlling and recording the inventory count. 2, observe how they are performing. Inspect the inventory. Test check, test count, test count, perform test count. And there are some matters which are most important you should keep in mind whenever if the inventory lying with third party is the question, you should write third party answer. So request confirmation, inspect and other procedures examples, that entire answer you should write. If there is no third party indication, they are asking you existence and condition, you should write this entire matter, then you should write this matter also. When you are doing inventory counting, keep in mind what is the nature of inventory that you are looking at. Okay, is it raw material? Is it work in progress? Is it finished good? That is one example. Another example of nature of good is type of inventory. Is it crude oil? Is it so and so? Is it so and so? What product it is? Nature of inventory, keep in mind. Is the entity maintaining perpetual inventory system? Check it out. Is the company maintaining perpetual? If the company is maintaining perpetual inventory system, you can do physical verification. Management can do physical verification whenever they want, not an issue. But when they maintain periodical inventory system, periodical means once in a while they'll update. They don't update every moment. 31st March it is compulsory. If it is periodical maintenance system, 31st March compulsory physical verification they need to do and update the records on 31st March for closing stock valuation purpose. Next, location. Keep in mind when you are going for physical verification, keep in mind where it is held, and also depending upon the location where it is kept, risk and materiality will also influence. Yes or no? Then is there any expert requirement? Check out, is there any expert requirement? Suppose you are going for crude oil checking, you are not expert in crude oil measurement. Yes or no? Take an expert along with you if required. Yes or no? Then what is the stage of completion? In case if the nature of inventory is work in progress, look at the stage of completion. That decides how much inventory is in progress. Are you clear? That's it. And when they are counting it, timing. If at all perpetual inventory system they are maintaining, they can do whenever they want. But if it's periodical system, timing is most important. 31st March compulsory, they should count. Are you clear? These are the points which auditor will take into account. Suppose if inventory counting is performed at other than balance sheet date. If it is performed on balance sheet date, whatever above they told, as usual I will perform. Suppose if it is performed at other than balance sheet date, same things. Even management is doing inventory counting on 20th April. After 31st March, they are counting 20th April, they are counting. Same procedures. When I go, I will just keep these factors in my mind as usual. In addition to this, I need to perform additional procedure. What additional procedure? I need to see changes in inventory between count date and balance sheet date are properly recorded or not. Exactly what you will verify. What exact procedures? Very simple. Is the company adjusted perpetual records correctly or not? First of all, I should see reliability of perpetual inventory records, and if there is any differences between the physical count result and perpetual record. Inventory record is maintained in perpetual inventory system records. If there is a difference between that record quantity and physical count quantity which is counted on 20th April, if there is a difference, I'll ask for the reasons. So 3 points I will have to verify there. If at all inventory counting is performed at other than balance sheet date, I have to verify 3 points. Are perpetual inventory records were properly updated? Are they reliable? If there is any difference between the records and physical count, what is the difference? That I need to check. Yes or no? Suppose the auditor is unable to attend inventory count. Management is planning to perform. First they planned on 31st March, you didn't attend. 20th April they are planning, you didn't attend. Every time something is happening, you try to attend on some other day, take your team and you do the counting. Ask management assistance also. So if auditor is unable to attend physical inventory count due to unforeseen, then they should conduct or observe. They should observe physical count on an alternative day and perform procedures on intervening transactions between management count date and your date. And suppose if inventory counting is impractical, it's impossible for you to do inventory counting at all. It's not possible at all because of various reasons, okay, which is out of the control of the auditor. It is not in the auditor's control. It is completely impractical. Then try to perform alternative procedures and obtain sufficient appropriate evidence regarding existence and condition of inventory. You can't leave it just because you are unable to attend physical inventory count. You can't leave it. Yes or no? Perform alternatively and try to get evidence on existence of the inventory. Is the inventory physically there? Condition, is it in good condition? Get evidence on existence and condition by performing alternative. Modify the opinion if alternative procedures are not possible. See, if alternative procedures are not possible means ultimately regarding inventory, you don't know whether they are existing physically. You don't know in what condition they are existing, which means you do not have evidence. So you should give modified opinion, which means either qualified or disclaimer of opinion. Am I right? And impracticality. Why impracticality? That may be due to nature of inventory or that may be due to location, such as safety concerns at the site. For example, you are an auditor for national defense. Our national defense department, you are the auditor. At Siachen, some defense equipment is there and it is very tough for the auditor to go there. Unless the auditor is super fit, extreme fit, it is not permitted for him to go there. Yes or no? And when the fitment check they did, you failed in that. For example, so you are unable to go there. It's impractical for you to go and check the inventory that is lying at so and so particular location. Are you clear? So that's it. Next, what is not impracticability? If auditor is feeling inconvenient to go, that is not impractical. If auditor is feeling, oh my god, their AC will not be there in the godown, that and all is not impracticality. Are you clear? Remember, even in SA 200, difficulty time cost is not a valid basis for you to omit audit procedure. Next, what are the example of alternative? I told, right, if at all impractical, you should perform alternative procedure and obtain the inventory. What is alternative procedure? Look at the sales documents of subsequent sales. Suppose as on 31st March inventory is there, you are unable to attend physically, but from the same godown sales are happening from April 1st onwards and deliveries are also happening. 1st April, 2nd April, 3rd April delivery happened means 31st March inventory is lying in the godown. That's one way. And perform other alternative procedures. Are you clear? If at all, ultimately you are unable to obtain evidence, modify the opinion because there is a limitation on the scope. Because you are unable to obtain evidence, so modify the opinion. That's it. Are you clear? Inventory, two things: lying with third party, lying with the entity. Lying with the entity, attend management count procedure, observe how management is counting, evaluate management instruction, inspect the inventory, test count the inventory. And matters relevant: nature of inventory, location of inventory, whether they are maintaining perpetual records, timing of inventory, and whether there is a need for expert, stage of completion of work in progress. If inventory counting is at some other date, 3 items you need to verify. Verify perpetual records are properly updated, are they reliable or not, yes or no. And then third point, if reasons, ask reasons for any significant difference. If at all inventory counting is impractical, try obtaining audit evidence through alternative procedure. If alternative procedures are not possible, if alternative procedure is not possible, you are unable to obtain sufficient appropriate evidence, give modified opinion as per 705. That's it. If inventory is lying with third party, request confirmation, perform, directly go in and inspect or perform other audit procedure. Other audit procedure means what? Below. Inspect documentation for inventory held by third party. Third one, arrange another auditor to physically count the inventory at third party location. 4, obtain other auditor report or service auditor report regarding controls related to inventory management at the third party location. If inventory is pledged at security, get a confirmation for that. These 4 procedures will come under other audit procedures. That's it. With this, 501 standard is also over. That's it. Confident? In a regular class, we discussed almost the standard for 2 hours. 2.5 hours. So 2 hours above we discussed, 2.5 hours with all questions, exceptional questions, how to draft, everything we discussed in depth. But here we briefly covered within half an hour. Actually, we covered almost 70-80% of the standard. That's it. Yeah, clear? So now let us do a quick revision of 550 standard, which is related parties. Okay. See, related parties, you have an accounting standard already. What accounting standard is dealing with related party? Related party disclosures. So accounting standard that is predominantly dealing with disclosure requirement of related parties. And anyhow, as a part of your audit, you have to verify whether the financial statements are prepared in accordance with accounting standards or not. You have to anyhow verify. Yes or no? Now, then what auditing standard 550 related parties is talking about? The auditing standard has 2 objectives. One, whether there is a risk of material misstatement, especially due to fraud. The auditor has to identify and assess risk of material misstatement, specifically through fraud in related party relationships and transactions, RPRT. Every time whenever you are writing an answer in 550, please mention the word RPRT, not shortcut, full form. Related party relationships and transactions. Okay. So SA 550, whenever there is a risk of MMS, the auditor has to identify risk of MMS in related party relationships and transactions. So this is what the objective of the standard. Then secondary objective is also there for the standard. The secondary objective is disclosure requirements, whether disclosure requirements as per applicable financial reporting framework is satisfied or not. This is the secondary objective. But in CA Inter 550 standard, we do not have objective discussion at in-depth. Just a brief scope of the standard only they discussed. So in accounting standard, we primarily focus on verifying disclosure requirements, whereas in auditing standard, the focus point is different. The focal point in auditing standard is identifying risk of MMS, because when you are transacting with related parties, sometimes it may carry high risk. It may carry high risk because, a company can create a dummy company. Simple. A company which is actually a loss-making company can create a dummy company and can sell the goods at a higher rate to the dummy company on credit basis and show higher profit and get a loan. This is just a very simple transaction, I'm telling you. Like this, multiple group of companies we create, a complex structure a company can create and do manipulation of financial statements, books of accounts, all that. Coffee Day is the best example. There is an NFRA which have taken action on the Coffee Day auditors, KPMG. Okay, KPMG is the auditors for Coffee Day in 2024. That to which financial year fraud it is? 18-19 year. It's a fraud related to 18-19 financial year, and that action was taken by KPMG. That action was taken by NFRA in 2024 year. So 24 or 25, in one of this year it happened, this incident. 10 crore penalty was levied on the KPMG and 50 lakh penalty was levied on the partner. 25 lakh penalty was levied on the quality control reviewer. What Coffee Day has done, they have created multiple entities and diverted the funds, and they manipulated funds. This is what the actual issue is. Okay, so related party study is very, very crucial when you are doing audit of financials, because the fraud risk is very high in related parties. Are you clear? Now, what are all we are going to study in this standard? We are going to revise in this standard. First of all, who is a related party? Then we will be understanding what is the nature of related party relationships and transaction. What is the nature of this relationship? What is the nature of the transaction? Then we are understanding risk assessment procedure related to related party relationship and transaction. Then we are understanding how this point we need to apply to smaller entities, how we need to apply to smaller entities, and what are the records and documents, what are the records and documents to identify, what is it? To identify related party relationships and transactions. Remember, any of this can be tested. Related party, this definition, this particular concept is important for MCQ, and all these points, either MCQ can come or a descriptive question can come. Related party relationship, 4 or 5 marks question. Risk assessment procedure related to related party, 5 marks question. Smaller entity considerations, 5 marks question. Related party records and documents, 5 marks question. And remember, all of this have been tested in the past. Do you understand the standard overview? Now, who is a related party? Who is a related party? What do you mean by related party? The standard divides related party definition into 3 parts. First of all, the standard says related party means the related party defined under applicable financial reporting framework. If at all accounting standard is there which defines related party, then take related party meaning as per accounting standard. Suppose if applicable financial reporting framework is silent on the related party aspect, then SA 550 gives the definition of related party. As per SA 550, who is a related party? Related party is a person, or it may be entity that controls or significantly influences the reporting entity. Remember, we are the auditor of reporting entity. If a person or entity is controlling or influencing us, then we call this other person, whoever is controlling us, whoever is significantly influencing us, we call them as related party. Or related party can be another entity which is controlled or significantly influenced by reporting entity. Suppose the client we are auditing, right, the company, if it is controlling another entity, if it is significantly influencing another entity, then that is also related party. Then third relationship, another entity. What is it? Another entity that is under common control. Common control along with reported entity. Nothing but we are one company, there is another company, for both of us common parent is there. Parent is anyhow related party. For parent I am related party. For the subsidiary, parent is related party. Not only that, there is another co-subsidiary is there, right? Co-subsidiary, we call them as sister concerns. We call them as what? Sister concerns. Sister concerns are also treated as related party. Sister concerns are also treated as related party. Are you clear? Easy or not? Sister concerns. Remember, so which means, for example, you take Tata Group. Tata Sons is controlling Tata Motors. Now, we are the auditors of Tata Motors. Tata Sons is related party. Now, another entity where Tata Motors has a subsidiary company called Tata Motor Passenger Vehicle Limited. For passenger vehicle, they have incorporated a separate company. Tata Motors is holding company for that. For example, now for Tata Motors, we are the auditors of Tata Motors. Tata Passenger Vehicle is also related party because Tata Motor is controlling it. Are you clear? And another entity that is under common control. For example, Tata Consultancy Services, Tata Chemical, Tata Beverages, all these companies, Tata Power, all these companies are subsidiaries of Tata Sons. We are also subsidiary of Tata Sun. These are all, which means me and other companies, for all of us common parent is there. We are called as sister concerns. We are all related parties. Are you clear? However, the most important part in the definition is the exception for common control. Any entities under, I will show you directly the book. Entities, look at the exception. Entities under common control of a state. State means what? It's actually government. Central or state, doesn't matter. Entities that are under common control of a government, they are not treated as related party unless they are transacting with each other significantly or they are sharing resources. Otherwise, they are not related party. Are you clear? Now, what do you mean by control? What do you mean by significant influence? Control, the key word is power to govern. Power to govern, governing. Whereas significant influence, participate. The keyword is what? Participate. The power to participate is the keyword in the significant influence. Are you clear? How do I know whether somebody is controlling, whether somebody is influencing, or we are controlling somebody, or we are influencing somebody? How do we know? Very simple. Look at the equity holdings. Look at the company equity capital, who is holding. Look at the key shareholders. Look at the holdings in other entities. Look at our company investment register. Look at the key management people and governance people who are part of key management in our company that we are auditing, who are those charged with governance, and who are their close family members. Are there any business relationships with the key management? By looking at this, you can understand who are all related party indicators. These are all indicators of related party. Now, sometimes there will be some related parties who are having dominant influence. Auditor has to pay attention to these related parties, because related parties with dominant influence is one of the source of risk of fraud. One of the significant source for risk of fraud. Related party with dominant influence. Are you clear? Next, special purpose entities. Sometimes our company will control some other company just with the limited shareholding. We may have less than 5% shareholding, less than 10% shareholding. We are very limited, but we can significantly control it, because we are the major supplier for the company. We are the major customer for the company, and we are having very minor shareholding, but we can control the entire business operations because we are a major buyer or major supplier. So this is one more example of special purpose entity. Are you clear? Next. Now the second aspect. So first part, related party definition is over. The second one, nature of related party relationship and transaction. The second thing auditor has to study is nature of relationship. Generally, related party relations and transactions are no different from transactions that are happening with unrelated. Okay, so generally related party transactions will not carry, they may not pose higher risk, just like compared to unrelated party transactions. But there are some transactions, sometimes related party transaction may result in higher risk of MMS. Example, 3 circumstances higher risk is possible. For example, first one, related party transactions may not follow normal market terms and conditions. Suppose we are selling goods to one company on credit, where the credit period is 120 days. Generally we sell it to credit period is 30 days, but to this company we are giving 120 days. That too, the sale happened at year end. Okay, this is a possibility that this is a dummy sale, but since auditor will question where the collection, we give 120 days credit period time, so that auditor will not question the credit period point, because subsequently when the amount is collected, nobody will look at. So we sold dummy good. We sold to related party at a higher price and manipulated the financial performance of the company and showing very good performance. So sometimes related party transactions may not happen at normal market terms and conditions. That is one of the area where high risk is there. Second one, our company information system. We are doing audit of company systems, right? We are doing audit of company financials, right? The company accounting software is failing to identify related party relationships, related party transactions. So the company, whatever transactions they are doing with related parties, our software is not identifying it. Our software is not summarizing it. Whatever transactions, whatever outstanding balances with related parties, we do not have any proper, software. Information system is weak. Information system fail to identify them. That is, if the company do not have a formal process to identify related party, then we will consider related party risk is high. We consider related party risk, related party relationship, related party transaction risk is higher. Third one, the structure. The related parties, related parties have extensive, the structure is so extensive, so complex, the transaction is so complex. This is third factor that will give us an idea, that will give us an indicator that there is a high risk involved in related party. This itself can be asked as a 5 marks question. Next, So therefore, you understood related party relationship carries sometimes high risk. That's why you need to pay attention to related parties. What you look for in related parties, what you understand for, what exactly you ask. Risk assessment procedure related to internal party. First, understand the related party relationships. So inquiry management, the auditor shall inquire. The auditor shall inquire. The auditor shall inquire. Who are the related parties? And compared to last year, prior year, what changes happened? Is there any relationship between, what is the relationship between them? Is there any transaction? If so, what is the type of transaction? What is the purpose for which the transaction happened? Check it out. Further, the auditor has to do risk assessment procedure, control evaluation. What evaluation? Get an understanding of controls established. Controls means what? The company should establish some system to identify, account, disclose related party relationships. Second one, the auditor has to check. Controls for authorizing and approving significant transactions. For example, you take any listed company, audit committee will approve all the related party transactions. There is a process for it. Also, ask a company whether they have a control for approving transactions which are outside normal course of business. So auditor has to look for three things in risk assessment procedure. First, understand what controls company established to identify, account and disclose related party relationships and transactions. Second, auditor has to assess the controls related to approval and authorization of related party transactions. Auditor has to look for controls for approving transactions that are outside normal course of business. Remember here, outside normal course, it may be with related party, it may be with unrelated. So we want to first identify, is there any transaction happened unusually? And if so, with whom it happened? So auditor has to do risk assessment. So before doing, inquire about the company first, who are all related parties, what relationship they had, what transaction they had with them, and you also check the controls in the company. This is called risk assessment procedure related to related party. Then smaller entities, you just read it later. Okay. Now, verification and existence of related party. How do you verify whether company has, even smaller entity point I'll cover, don't worry. Even how do you verify and identify related parties? Fine, you understood what controls company established, you inquired management, everything is fine. You know nature of related party transactions sometimes carry higher risk. You know what is meaning of related party, all that is fine. How do you identify? By looking at various records and documents. What are the records and documents? Best document, shareholder register. Another best document, entity investment record. Another best document, agreement with key management and those charged with governance. I verify them, yes or no. And I will look at life insurance policies which the company has taken, key man insurance policies which the company has taken, who are the nominees in that. And I will look at big contracts which are renegotiated during the period. I will look at income tax returns, and I will verify statement of conflict interest. Directors, board of directors and top management, key managerial persons, they should give a statement of conflict statement. They need to give a conflict statement regarding some transactions. That statement documents I will look at. I will look at minutes of the meetings to identify related party. All that. Are you clear? So the auditor has to be alert throughout the audit to identify related party relationships and transactions. Especially you have to be alert when you are verifying records and documents. Now, suppose if at all you are doing an audit of a smaller entity, if at all you are doing audit of a smaller entity, how do you verify related party relationship? Just like a larger entity, first I will inquire management. I will observe how management is reviewing the activities. I will observe how they are monitoring and reviewing, and I will inspect various documentation, some relevant documentation I will verify. Remember why smaller entity point is discussed separately? Because in small entities, control environment is different. It is not like a bigger entity. Like a bigger entity, control environment won't be there. Further, control activities in smaller entities are less formal. In a big company like Reliance, all the control processes is well documented, rules and regulations well documented. If a new employee joins, he first to follow that. In a smaller entity, formal documents will not be there. Imagine a supermarket, grocery store, there won't be any rules and regulations manual. Yes or no? Then here the owner himself, the manager, if at all in the absence of owner, manager will be there. The manager himself can mitigate the entire risk. They can prevent every fraud, they can prevent every error by effective oversight. Or they can easily make fraud potentially because only one person is involved. Yes or no? Since only one person is managing or two persons are only managing, they can easily do a fraud or they can easily prevent a fraud. This is the reason why auditor has to pay special attention in case of smaller entities, because the control environment is not documented, control activities are less formal, That's it. Are you clear? With this, related party standard 550 is over. Easy. Am I right or not? Confident? Yeah. Let's revise now. Another standard 510. Opening balances. The actual heading of the standard is initial audit engagement and opening balance. You know, this standard specifically deals with initial audit engagements but not recurring audit engagements. But we apply the principle stated in this standard even in recurring audits also in reality. But the standard main focus is in respect of initial audit engagement. The auditor has to be very careful about opening balances. Now, first of all, what is an initial audit engagement? We are discussing, by the way, 510 initial audit engagement hyphen opening balances. Okay. What is an initial audit engagement? There are two types of engagements which are called as initial audit engagement. For example, I have accepted audit of a company where prior period financial statements were not audited. They were not audited. Then that's an initial audit engagement. Or prior period financial statements were audited by predecessor auditor. Prior period financial statements were audited by predecessor auditor. Who is a predecessor auditor? Predecessor auditor is an auditor from different firm. Am I right? Suppose if my partner last year he did the audit, this year I am doing the audit, but both are belonging to same firm. This is not predecessor audit scenario. Predecessor auditor means there is a change of auditors happen. So last year the auditor was different, now the auditor was different. So this particular engagement is called as initial audit. Very simple. My audit firm was appointed as an auditor for the first time to this client. This is initial audit engagement. Are you clear? Predecessor auditor means what? An auditor from a different audit firm who conducted the audit of financial statements of prior period. Now, opening balances. Why auditor has to worry a lot? Very simple. You don't know anything about the company. Yes or no? Opening balances, accounting policies, what are material balances, what are significant transactions in the companies, nothing you know. So they are telling you, you should obtain sufficient appropriate audit evidence. You should obtain sufficient appropriate audit evidence on opening balances, whether it contains material misstatements affecting current period financial statements, whether opening balances contain material misstatements which affecting current period financial statements. This evidence you should obtain. The standard objective, if you see, it is also dealing with another objective. It is also talking about accounting policy. The auditor has to check whether accounting policy is consistently applied in the current period, which is taken from last year, nothing but which is taken from opening balance. Is it consistently applied? Suppose if changes were there, whether these changes were properly accounted, whether the changes were properly disclosed. The auditor has to check, the auditor has to obtain evidence whether accounting policies were consistently applied. If not, whether changes were accounted and disclosed correctly or not, we should get evidence. So this is the audit objective. Clear? By the way, we should obtain evidence on opening balances when they're material in the current period and prior period was audited by some other auditor, or prior period were not audited at all. Further, if financial statements includes prior period information, nothing but comparative information, the standard scope, SA 510 scope clearly says apply 710 guidelines also. Apply 710 guidelines also. So scope of the standard. What are the responsibilities of auditor in relation to opening balance in an initial audit engagement? Further, it is alerting you if the financial statements that the company which prepared, if it has last year information also, then 710 requirement also you follow. This is scope and objective. Are you clear? Now, what is the audit procedure for opening balances? What is the audit procedure for opening balances? First one, perform procedures. Whether last year or prior period closing balances were correctly carried forwarded and brought forwarded. Verify whether prior period closing balances were correctly brought forwarded. Yes or no? Now perform and verify whether accounting policies, they'll ask you straight question, 5 marks question, what is the audit procedure for opening balance? Verify whether accounting policies, second procedure, whether accounting policies were consistently applied, whether accounting policies were consistently, accounting policies reflected in, where it is reflected in opening balances, accounting policies reflected in opening balances, were they consistently applied? Third procedure, perform one or more of the following, perform one or more of the following. Three procedures they stated. One, last year closing balances, were they correctly brought forwarded? This you should verify by checking books of accounts. Generally by default in books of accounts, some accounting software they will use, it is an automatic brought forward, so no need to specifically check on that. Second one, check accounting policies, whatever they shown in the last year, were they currently applied, same consistently applied or not, check it out. Third one, perform one or more of the following procedures for opening balances. What auditor has to check? One or more, what auditor has to check? The first one auditor has to check is review audited financial statements of prior period. Generally last year financials were audited by somebody, right? Review audited financial statements and relevant documents. Review audited financial statements and relevant document. Review the documents and audited balance sheet, compare with the last year, you will easily understand. Yes or no? Then current year audit procedures you performed, right? Current year you do some audit procedure, right? Current year you do some audits. For example, current year you verify collections from debtors, current year you verify payments to suppliers and all. This collections and payments current year procedure will provide evidence for opening balance. Verify whether current year procedures provide evidence for opening balances, and perform a specific audit procedure for opening balance. The standard says perform a specific audit procedure. Specific procedure for opening balance means what? Example, what is example? Take current year opening trial balance, you take current year opening trial balance, you are the auditor for current year, take opening trial balance, match it with last year signed balance sheet, you match. Last year signed balance sheet you match. If you do this specific procedure, you will get an evidence whether opening balance is correctly brought forward or not. And so three procedures. Okay, one, last year balance correctly brought forward or not, check books of accounts. Check whether accounting policies are consistently applied. Perform one or more of the procedures. Now look at it. Look at this. So what is the audit procedure for opening balance? In the book it is in 510 standard. Okay, this itself can be asked as a 5 marks question. Verify prior period closing balance or correctly brought forwarded. Ensure opening balance reflect application of accounting policies. Perform one or more of the following, like 1, review financials and relevant documents, evaluate current procedures, provide evidence for opening balance, conduct specific audit procedure. Specific audit procedure means what? Comparing trial balance, all that. Now to what extent I will perform? This itself can be asked as a 5 marks question. What is the nature of procedure? To what extent you perform? It is influenced by so many factors. Suppose if last year auditor gave a modified opinion on the last year balance sheet, auditor has to be very serious on the opening balance. So the nature and extent of audit procedures for opening balance, to what extent I will involve in opening balance, depends upon predecessor auditor's opinion whether it was modified or not, and it also depends upon how significant opening balance to current period. Sometimes if last year company was newly incorporated, now no transactions happened last year much, that means in the current period opening balances are not much significant. Able to understand? Then what is the nature of account balance? Are they current assets, are current liabilities, are non-current, or liabilities are non-current assets? What is the nature of account balances in the opening, and what is the nature of transactions that they did in the last year, nature of disclosures what they did, and risk of MMS that you identified, and also focus on what accounting policies that they are following. Depending upon the complexity of the accounting policy, depending upon the significance of account balance transaction disclosure in the last year, depending upon the significance of opening balance in the current year, depending upon whether prior period auditor modified or not. These factors will influence the nature of audit procedures that you perform on opening balance. The extent of audit procedure that you perform on opening balance will decide. For example, generally, nature of audit procedure, opening balance, what nature of procedure we perform, we simply check, we simply cross check the trial balance and this, that's it. We don't obtain external confirmation for opening balance. We generally get confirmation for closing balances. We don't get external confirmation for opening. But if opening balance, I feel some risk is there, I will get external confirmation even for opening balance. Are you clear? Then generally, predecessor audit report, suppose if at all prior period financials were already audited, you can happily, if the prior period financials were audited, you can obtain sufficient appropriate evidence on opening balances by reviewing audited financials, by reviewing supporting schedules in the notes to accounts, by reviewing relevant documents. Example of relevant documents, board of directors report, annual report will be there, yes or no, all that, opening trial balance will be there. By looking at all this, you can get evidence. Further, ordinarily you can rely upon closing balances. You can trust closing balances because audit is already conducted. You don't have to doubt it unless in the current year you found some evidence contrary. For example, opening debtor 1 crore is there. In the current year, collections were not made. There is no collection. In the current year, since collection was not there for the debtor, I will obviously have a doubt whether the debtor value is correct or not. When now, if at all I investigate further, since collection was not there in the current year, in the opening debtor, I found an evidence that it is doubtful. And in the opening, they have not made any provision. I found a material misstatement based on current year audit procedure. Are you clear? For example, for current assets and liabilities, no collection or payment provides evidence. In the current year, opening debtors, you collected in the current year. Opening creditors, you paid in the current year. This collection and payment provides evidence regarding existence of the debtor. You get an evidence on rights over the debtor, obligation to the vendor, and you get a evidence about valuation. So in the current year, collections and payments provide evidence for existence, rights and obligation, and value. Inventories, I'll come back. For non-current assets, how do you get evidence for non-current assets? Examine accounting records and other underlying. Look at the books of accounts first, whether PP, non-current assets and all correctly recorded in the last year, and also verify fixed asset register, other records. And use confirmation with third parties in case if it is a long-term debt and all. For opening balance, you can ask confirmation, not an issue. In case if it is a loans and borrowings from banks, look at the internet banking, you can get evidence. And any other procedures, if necessary, you perform. By this way, you can get evidence regarding non-current assets and liabilities by performing procedures in the current period. See, one procedure is, I will verify last year balance sheet values carry forwarded correctly. I will compare with last year's signed balance sheet. That is giving me evidence about opening balance numbers correct or not. Is the values and all, are they genuine or not? Are they genuine? Are they existing or not? Balance sheet audit, that other earlier procedure is giving me evidence. Are they genuine or not? Current year I will verify collections. Current year I will verify payments. Current year I will verify external confirmation I'll get. No, this will provide me evidence about their genuinity. Are you clear? For inventory, how do you get evidence for inventory? Opening stock, how do you get inventory? Very difficult. Audit procedures in the current year will not provide evidence for opening balance of inventory. Therefore, we need to perform additional. What I will do, opening balance of inventory, that much is there or not, I don't know. But I will go for physical verification now. And right now, based on the stock I observed in the godown, I will do backward reconciliation to opening balance. And I will perform procedures on valuation of opening inventory. Already company opening stock workings are there, right? That workings I will compare with my reconciliation. Are you clear? And I will apply analytical procedure, gross profit testing, cutoff testing I will apply. Cutoff testing means what? I only see whether current year sales are recorded in current year. Current year purchases recorded in current year correctly or not, I will see. If current year purchases and sales correctly recorded and current year closing stock is correctly recorded, if I reconcile these, I will get opening balance. That's why I need to perform cutoff testing. Are you clear? Once you perform this audit procedure, finally you will have a conclusion, right? What conclusions? You can conclude on two things. You have to conclude on two things as per this standard. First, conclude regarding accounting policies. What should I conclude? If accounting policies are not consistently applied, means changes are there in accounting policy. But guess what? They were not properly accounted or not adequately disclosed. Accounting policies consistency is missing. Changes happened. These changes not properly accounted, not properly disclosed, which is a violation of accounting standard, qualified opinion or adverse opinion. Same way, opening balances. What is it? Opening balances. If opening balance of material misstatement, for example, just now I told one example, one debtor value is there 1 crore, last year closing balance sheet shows 1 crore, current year also same 1 crore is there. Where is collection? Collection is not there. When I investigate, when I perform additional procedure, I discovered that this particular debtor is outstanding from so long years. In the last year, no provision is made. In the current year, no provision. Fine, current year, I'll tell the management to make a provision. But in the last year, the provision was not there. Opening balance contain material misstatement. If I find the opening balance contain material misstatement, I will ask management to properly account it and disclose it. If they do not account it and disclose it, I will give a qualified opinion or adverse opinion. But before I talk about opinion, before I give an opinion, first I should communicate. If at all auditor concluded that material misstatement is existing in the opening balances, the auditor shall communicate them to management and those charged with governance. First, whenever you find a misstatement in opening, understand the impact on the current year audit. Once you understand the impact on the current period audit, if it is having a high impact, inform it to top management and tell them to correct and rectify. If they do not correct and rectify, give modified opinion, qualified or adverse. Suppose you are not getting evidence at all. Opening balances, you are not getting evidence at all. Opening books of accounts and all destroyed by fire. Last year financials were not audited. Books of accounts are also destroyed by fire. And they are material to current year. Opening balances are very impactful in the current year. It is not possible for me to give opinion on current year. So I will either give a qualified or disclaimer. Generally we give disclaimer. If at all we do not have evidence for opening balances which are material, that too, then we give disclaimer of opinion. Are you clear? That's it. 510 standard is over. Easy or not? So in 510 standard, audit procedure 5 marks question, nature and extent of procedure 5 marks. In this nature and extent, they may specifically ask you, how do the auditor can obtain evidence regarding current assets and liabilities? How do auditor can get evidence regarding inventory? How do auditor can get evidence regarding non-current assets and non-current? 2 marks they can ask you. 6 marks question they can ask you, or a 5 marks question they can ask you like this. Conclusion and reporting they can ask you. Nature and extent of audit procedure they can ask you. Are you clear? That's it. Now last point, opening balance means what? Account balance that is at the beginning of the period, correct? Whatever account balance is there in the beginning, which is nothing but last year closing balance. And it also includes matters which require disclosure. In the last year balance sheet P&L in notes to accounts, we gave segment information, related party disclosure, contingencies. They are also treated as opening balances. So opening balance means don't just restrict yourself to balance sheet items only. Opening balance also includes notes to accounts item as well. Are you clear? Further, opening balances reflect. What do opening balance reflect? It just reflect last year business. Last year business means what? Last year transaction, last year balances, last year accounting policies. All these three put together is nothing but today opening balance. That's it. Over. 510 standard is over. Easy or not? So we already revised 501, 505, 510, 550. Now let us revise 2 more standards. One is 610, another one 500. Okay. Now let's begin 610 standard. What is 610? Using the work of internal auditor. Using the work of internal auditor. Okay. Yeah. Now just a minute. So what is internal audit? What is internal audit? Internal audit is a consulting activity and assurance function. It's a consulting activity and assurance function where they evaluate and improve. They evaluate and improve the organization's governance, the organization's risk management, the organization's internal control system. So internal auditors, they provide assurance and consulting. In a company, internal auditors, they don't give opinion like we give. We stat auditors give opinion on the financials, right? Internal auditors will not give such a kind of opinion. They provide assurance on how controls are working. They evaluate risk management systems. They evaluate governance. Infosys has a big internal audit team. Reliance has a very big internal audit team in the company. In fact, in Caro, as a stat auditor, we have to comment in clause number 14. Yes or no? Point A, point B. Whether company has internal audit commensurate with the size and nature of the entity. Whether internal auditors reports are considered by you as a part of your audit. You need to comment in Caro clause number 14 in audit report. So internal audit, what internal auditor do? They provide assurance to the company, they provide consultation to the company on these three matters: governance, risk management, internal control. Now, what are activities related to internal controls? What are activities related to internal controls? Look at it. You know, in our book, you can just come to essay 16. Below that, activities related to internal control. What internal auditors relating to internal control focuses on? 4 elements. They review compliance with laws and regulations. They review operating activities. They review financial and operating information. They evaluate controls to know whether they are operating effectively or not. And they will provide assurance on the controls which are relevant to audit to the management. Okay, just 1 minute. So look at, so they evaluate controls and recommend improvements into it. They provide assurance on operating effectiveness of controls. They verify financial and operating information, how the entity identifying, measuring, classifying, all that. And they review economy, efficiency, effectiveness of operating activities. They review compliance with laws and regulations and how management policies are complied by employees, how management directives, internal directives are complied. This is also called as compliance audit. This is what internal auditors do. But actual standard is what? Using the work of internal auditor. Using the work of internal auditor can, first of all, for example, in the company, there is an internal audit department, very big department. See, what we do as a part of external audit, we know our objective is to give opinion on the financials. For that, we have to verify the balance sheet P&L, whether are they prepared as per accounting standard, whether they are prepared as per applicable framework. Then we should verify underlying books of accounts. We should verify underlying transactions. Yes or no? We should verify statutory duties. We should verify purchases. We should verify sales. We should verify employee benefits. So much we should verify. But all this is already verified by internal auditor. Yes or no? For example, in Caro, we have a point. 7th clause is there. Inside that first subclause, undisputed statutory dues. Is the company paying them regularly? And is there any undisputed statutory due that is in arrears as on 31st March, which is in arrears for more than 6 months, outstanding for more than 6 months? We need to report it. Now, is the company regular in paying the taxes correctly on time? I want to know, for example, this company where I am doing audit, suppose the company where I am doing audit, they have 24 states. They have registrations for GST in 24 states. Okay. Now, you know very well, right? In GST, the registration is state-wise. So obviously the company single, it's only a single company, but they have 24 GST registrations. And in each registration, they have to file monthly 2 returns, yearly 24 returns, 24 registrations into 24 returns. Almost, you see, 480 plus, 48, 528, almost some number. Okay, 500 returns, close to 500 GST returns company filed. Only when I verify entire this 500 returns, I will understand, is the company paying taxes correctly, especially GST correctly or not. I can understand, is the company paying and filing GST returns regularly. I can comment only when I verify this 500 return. Now tell me, is there a significant difficulty or not? It's very tough, very lengthy process. But luckily, company internal auditors have already performed that reconciliation. That GST reconciliation of these 500 returns, the company internal audit department has already performed. Now the question comes in my mind, as a stat auditor, can I use that work? SCA 610 says, happily you can use, but it gives one precaution. It says one important rule. Even though you are using internal auditor's work, the sole responsibility for the opinion expressed is with external auditor only. The standard says you can take the help of internal auditor. Remember, we saw branch audit. In SA 600, we discussed something about branch audit. 706 other matter paragraph, we discussed about other auditors, branch auditors. We discussed about joint audit in 299. There I told you, when joint auditors are there, responsibilities divided. When State Bank of India auditor is giving opinion on State Bank of India, where 6,000 branches were audited by branch auditor, we mention in the other matter paragraph, these branches were audited by them. My opinion is based on their opinion. I will tell them specifically to the public that for the branches, they are only answerable, not me. Such a kind of reporting you should not do if you are using the work of internal auditor. If you are using the work of internal auditor, you can't use such a kind of statement in audit report. In audit report, can I say GST, well, company is regular? In Caro, I want to write like this, sir, the company is regular in paying GST based upon the information received from internal auditor. You can't mention like that. When you are using internal auditor's work, it is your choice whether to use or not. There is no requirement in the standard also. The external auditor is not required to use. There is no compulsion for you. It is your choice whether to use it or not. Suppose you are using it. You are only having 100% responsibility. You cannot refer his name in the audit report. You cannot refer internal auditor's name in the audit report. It is not permitted at all. Are you clear? 100% responsibility for the opinion expressed by you is with you. If at all internal auditor has done mistakes in GST and you believed that everything is true and you said everything is true and fair, thinking there are no mistakes, and tomorrow it was discovered as a big fraud, you should only answer to the regulatory authority why you couldn't discover it. You may say you used internal auditors work, all that, but you are only primarily responsible. He is not responsible. He is part of management. Able to understand. So accordingly, the 610 standard is giving you guidance, because ultimate responsibility, even after using internal auditor work, ultimate responsibility is with the external auditor, right? So the standard 610 gives guidance on when to use the internal auditor work. If so, where you can use his work, all that. And this standard divides internal auditor's work usage using the work of internal auditor. This standard divides using the work of internal auditor into two parts. The standard divides using the work of internal auditor into two parts. Type 1 and type 2. Type 1, using the work performed by internal audit function. Type 2, using internal auditors to provide direct assistance to external auditor, using internal auditor to provide direct assistance to external auditors, where internal auditors will work under the direction, under the supervision, under the review of external auditor. This is type 2. These are the two types how the standard divides the. Now how you can take the help of internal auditor? You can take either in the type 1 or type 2 format. Type 2, what is direct assistance? For example, if I have insufficient team, where company is expecting me to finish audit quickly in a short span of time, which is possible also, provided I have additional team members, but I don't have sufficient of in my organization, where management told an option, don't worry, I have internal audit team 200 employees, we have 10 members you take into your team. Next 20 days, you take this 10 members into your team. They will help you. Just like how your articles, your managers work, no? Same way, my internal auditors will work with you for the next 20 days and I will not interfere with them. Now, company's internal auditor, or they are directly working for me. They are directly working as an assistance to me. Are you clear? And that's called direct assistance. This is one way we can use. Another way, GST example I told, right? Internal auditors have already prepared entire GST reconciliation. That work I can take. Now, what are all the guidelines that I should follow in this particular scenarios? This is what SA 610 standard talks about. And remember, whether you're using type 1, whether you're using type 2, the ultimate responsibility for the opinion that you are giving is only you. Nobody else is responsible. Are you clear? Now, let's now discuss about type 2. Type 2, using internal auditors to provide direct assistance under the direction, supervision and review of external auditor. What points I should consider? First question, can I take direct assistance? This is the question. Evaluate two things. In exam they can ask you 4 marks question. What are the points, or an MCQ can come? what are the points or what are the factors the external auditor shall evaluate before using internal auditors to provide direct assistance? What factors you will evaluate? First factor, objectivity. Second factor, competence. You evaluate two things here. What is the level of objectivity these internal auditors are enjoying in the organization? What is the level of competence? If the answer is yes and yes, you will use internal auditor to provide direct assistance. Suppose if internal auditor is lacking objectivity or they are lacking competence, you will not use internal auditor to provide direct assistance. Clear? Now look at. So under what circumstances external auditor will use? Look at it. In our book it is K. Okay. So what is direct assistance? Use of internal auditor to perform audit procedures under the direction, supervision, review of external auditor. When you can use, assess the competence of the internal auditor. You know, assess threats to objectivity. For that, how do I know whether there is a threat to objectivity? Objectivity means what? Working in an unbiased attitude. See whether internal auditor can work unbiased. See whether they are competent. How do you know whether they are unbiased? Inquire. What relationships they have? What interest they have on the entity? In the entity, what sort of relationship they have? They are just employees. Nothing else is there. Then they are more objective. Yes or no? So check the objectivity, check the competence. If at all there are significant threats or they are lacking sufficient competence, don't use internal auditors to provide direct assistance. Suppose you verified and you concluded that yes, objectivity is there, competence is there, you decided to use them. But don't delegate the following works. Don't delegate them following works. Remember, at the end of the day, they are company staff. They are not your staff, they are company staff. If some severe issue they identified in audit, as a part of your team, they identified some severe issue, they will not report. They will not report to you. They will be favorable to management always. So when you are allocating works to them, when you are allocating works, now those 10 members are part of your team. Now you need to allocate them work just like how you allocate your audit team. So you need to allocate them the work, but don't allocate the following works. External auditor shall not use internal auditor for procedures that involve significant judgment, procedures that involve higher assessed risk of MMS, procedures where work is already performed by them or they are planning to perform. To avoid duplication, let's not use them. Or it related to, if at all I want to take their help relating to 610 decisions. Under SA 610, under this standard, I should decide whether can I use his work or not. Can I ask him whether can I use his work or not? You should decide. Under SA 610, there are some decisions the auditor has to take, stat auditor, external auditor. That decision making process, don't delegate them. You delegate any other work. So these 4 activities, external auditor shall not delegate to internal auditor. Further, once, okay, I understood. When I can use, I understood. For what works I can use, for what works I will not use, I understood. Now, there is a formality that you should perform. There is an activity. What are the activities? What are the activities external auditor shall perform before using direct assistance? 2 things, 2 agreements you need to enter. One agreement with management, one agreement with internal auditor. What with management you will enter? That management will allow internal auditors, to work under external auditors instructions without intervention. Management should not intervene. As on 20 days they are providing me, they should not intervene. From internal auditor who are coming into my team, 10 members, with each of them I'll enter into a written agreement that they maintain confidentiality. Whatever I tell them, they should not go back and tell management as it is on the same day. Yes or no? And they should inform me what are the threats to objectivity. Once they are part of my team, 20 days, management will be poking them from behind. Hey, tell me what happening. They should not inform anything to management. And if something like that incident happen, they should first communicate and tell me. So like that, I enter into an agreement with internal auditors who are providing direct assistance. This is type 2. Are you clear? Now type 1. So what is type 1? Again, type 1 is what? Using work performed by them. Work is performed by them and that work we are using. What are the questions the standard is asking? First of all, can you use the work evaluate before using type 1? Before using type 1, what evaluations you should make? and when you shall not use type 1. Are you clear? Suppose you decided to use type 1. If so, nature and extent of type 1 work that can be used. Again, some works you cannot use under type 1 method. Are you clear? And fifth one, discussion on type 1 usage. You need to discuss with internal auditor when you decided to use type 1. And sixth one, coordination. There are totally 6 concepts that are there. Now look at similar. First one, what you need to evaluate before using type 1 work. Tell me, in type 2 what we need to evaluate? Is he objective? Is he competent? Same points here also. Whether internal audit function has a sufficient objectivity, whether internal audit function has sufficient competence. Type 2 we saw, right? Same. But here there is a third point. Here I am not using them directly, I am using their work. They already performed the work as per their own guidelines, their own policies, their own regulations. Yes or no? They have their own approaches. They worked as per their approach, their policy, their procedure. Whether their approach is systematic, and disciplined and including quality control, I will evaluate whether internal auditor is having a systematic and disciplined approach, including quality control, because I am not using him directly, I am using his work. So how he performed that work? Do he has a systematic approach? These 3 points I will check. Suppose if internal auditor is lacking objectivity, if internal auditor is lacking competence, or if they lack a systematic and disciplined approach including quality control, I will not use them under type 1 category. I will not use their work for type 1. For example, they are objective and competent, but they don't have a systematic approach. I will not use for type 1, but I can take their assistance for type 2. Are you clear? In type 2, no, the systematic and disciplined approach is not relevant. MCQ can come. Which of the following is not a factor while evaluating direct assistance? Systematic, disciplined approach, quality control, that's not a factor. Able to understand? Now, what do you mean by objectivity? What do you mean by competence? What are the factors for objectivity? What are the factors for competence? What are the factors for systematic approach? That we need to discuss. Now, objectivity. Now again, go back to type 1. Type 1. Evaluations. Okay, before using type 1, what is the first evaluation? First evaluation is what? Objectivity. Yes or no? So how far IAF's status in the organization, what is the internal audit status in the organization, and policies, are they supporting their objectivity? Objectivity means what? Do internal auditors working in an unbiased manner? Is the organization supporting that? Look at that. Organization's objective, internal auditors objectivity based on their status in the organization. Second one, what is the level of competence? Competence means what here? It's a knowledge. Competence means it's about skills, where you perform the task diligently as per standards, as per benchmarks. You do work as per benchmarks. So knowledge and skill is required for you to work in a way to comply with benchmarks. Then you are competent. So third criteria is what? Do they have a systematic and disciplined approach, including quality control, where internal auditors know they should plan systematically, they should perform the systematically, they should supervise the works. Internal auditors has to supervise their work systematically, they should review systematically, they should be documenting systematically. If they have a systematic planning, performing, reviewing, supervising, documenting, then I assume that they have a systematic and disciplined approach including quality control, then I can use their work. 5 elements here: planning, performing, supervising, reviewing, documenting. And all this should be in a systematic manner. Only then I feel that they have a proper quality control, they have a disciplined and systematic approach. Third criteria satisfied, for example. Then I will come back to second criteria. Competence I will see. Competence means what? How internal auditors are hired, how internal auditors are trained, how companies assigning them the tasks. Do they have technical training in audit? Do they have exposure in audit? Do they have knowledge of entity financial reporting framework? How far internal audit is resourced? Means what is the size of the team? Remember, competence is useless. No matter how competent you are, if resources are not there, your competence is useless. How far resources are adequate for the internal auditor? Adequacy of resource, hiring and training policy, exposure, technical proficiency of internal auditor in auditing, and knowledge of financial reporting framework. These 4 factors will make me understand whether internal auditor is competent or not. Then objectivity, I will see his status in the organization. Is he at a superior level or is he at a subordinate level? Okay, whether he has an authority and accountability so that he can be free from bias, he can be free from conflict. Yes or no? No. Whether employment decisions are overseen by top management. Internal auditors' employment decisions, top management should oversee, which means they will have a direct reporting with top management. Are there any constraints and restrictions? I'll ask him, do you have any restrictions and constraints? Suppose you find some severe issue, will you report it to management? You have a freedom to report us. I'll ask him. And I will see whether internal auditors have any operational duties, whether do they have any managerial duties. That's a conflict. You are an auditor. Internal auditors should not involve in operations. Internal auditors should not involve in managerial roles. I will see these 4 factors to assess their objectivity. See whether I can use type 1 work or not. 3 factors I will evaluate: objectivity, competence, systematic and disciplined approach. How do I know whether he is objective? Organization status, governance, restrictions, all that. This itself can be asked as a 5 marks question. Or competence, this itself can be asked as a 4 marks question. And sometimes I will ask you this part, objectivity and competence put together, they'll ask you entire objectivity and competence. This itself can be asked as a 5 marks question or 6 marks question. Entirely they can ask you. Now objectivity and competence, they both are complementary. They both shall be viewed as one to each other, continuum, complementary. Objectivity, internal auditors are very genuine, honest, unbiased, but that cannot compensate lack of competence. Competence cannot compensate lack of objectivity. Higher the objectivity, higher the competence, the more likely we use their work. Just because they are objective, you can't say they are competent. Just because they are competent, they are objective. You can't say they are objective. Objectivity should be there, competence should be there. Are you clear? These are the factors I evaluate. Indirectly, IAF work, his work, you should not use. Type 1 work you should not use when objectivity is not adequate, when they lack sufficient competence, when they does not apply systematic disciplined approach including quality control. There you should not use it. Suppose in the client that you are doing audit, you found a positive circumstance everywhere, like objectivity is there, competence is there, systematic disciplined approach is there. Now you decided to use his work. Which works you can use, which works you should not use, that also you must know. You know what the standard says? The standard says external auditor shall perform work more directly, use the internal audit function less. The standard gives you guidance in such a way you don't depend significantly on internal auditor. You should not unduly depend on internal auditor. You can depend on him, but it should not be unduly. Management should not feel like you are totally depending on internal auditor only. What are you doing then? So the external audit shall perform work more directly in the following aspects. When internal auditors lack competence, you have to do the work directly. When internal auditors have lacking objectivity, then don't use their work. You do work directly. Or they are objective, they are competent, but there is a high risk of MMS at assertion level. At assertion level, high risk is there. Internal auditors have performed NRV workings verification, valuation, NRV, net realizable value in case of inventory workings, they verified. But company stock is completely crude oil. Okay, that crude oil is highly subject to price fluctuations. So NRV workings involve high risk of MS. Able to understand? There, don't ask internal auditor to verify it. You verify directly. Clear? Or when more judgment is required in an area where more judgment is required, the more judgment required in planning and performing the audit, or more judgment is required in evaluating evidence. So if at all more judgment is required in planning the audit, performing the audit, evaluating judgment, don't use their internal auditors. Don't use their work. Type 1 work don't use. You perform that work directly. Are you clear? Indirectly, where you can use internal auditors work, which works of internal auditors you can use, any substantive procedure, limited judgment is involved. Use them, use there. You can use their work where they did compliance with regulatory requirement. For example, GST reconciliation they did, compliance with GST law verification they did. It is just a factual verification. That workings you can take. You can ask them in tracing transaction through information system. You can ask them audit trail exception report. Okay, you can ask them trace some journal entries in the books. You can ask them for observing inventory physical count. You can ask them regarding testing operating effectiveness of controls audit they did. You can ask there, you can take their reports. So the external auditor consider what nature of work internal auditor is doing, what scope of work he is doing or he is planning to do, and I will see how far it is relevant for my audit. So what works is planning, what is he doing, and is it relevant to my audit? I will consider these points and decide which works of internal auditor I can use. So nature and extent of work of IAF can be used by external auditor. It depends upon nature and scope of the work, relevance of the work. Examples are this. This itself can be asked as a 5 marks question. So nature and extent of IAF work to be used by external audit depends upon following factors. Examples of various works that can be used is this. But there are some works where you should not use their workings. What are they? Suppose you decided, okay, I will use GST reconciliation, his working, TDS reconciliation, his working, sales and purchase workings and all, I will use internal auditor's work. You decided, discuss with him. So external auditor, when he planned to use internal auditor's work, you decided to use certain works. What you should discuss, what are the procedures you should perform when you are planning to use internal auditor. Discuss the planned usage, tell him what works you are going to use, and when you are discussing with him, you have a meeting with internal auditor. When you're discussing with him, you will address the following points: timing, when are they going to do that work, how are they going to do, how much they are going to cover, what is the materiality level for financials, what is the sample size and selection methods that they are going to follow, documentation, how are they going to do, how are they going to review and report. And if at all any of them, if I feel something is not enough for my point of view, from my audit point of view, maybe for him it is okay, for internal audit purpose it is okay, I will request him, can you do in-depth audit, can you do, so that for me that work can be more useful to me. And I will read internal auditor's report, I will read internal audit reports and find and see what are the findings they made. Yes or no? And whatever the work they are giving, type 1 work, for example, GST reconciliation, they did all 24 branches, 24 returns in a month, almost 500 plus returns related single reconciliation statement they gave. Will I blindly document and say GST is proper? I should verify whether GST workings are properly done or not. So the external auditor shall perform sufficient appropriate procedures on internal auditor work to know whether it is adequate for the purpose of audit, and make sure there is a proper coordination. External auditor and internal audit function should have a proper coordination, like they must discuss at appropriate intervals throughout the audit, because you are using his works and his work is again influenced by the way you are using it. Yes or no? So discuss at appropriate intervals frequently, and any matters that you find which is important for him, communicate. And any matters he finds important for you, he should inform you. The external auditor is informed of significant findings by internal auditor. External auditor has access to internal auditor's report. So internal auditor should coordinate with external auditor should coordinate with internal auditor. They should frequently discuss. Coordination, 4 marks or an MCQ can come. That's it. Standard 610 is over. Easy. Now you read the standard thoroughly once again. It will be very easy for you. Yes. Now let us discuss SA 500. This is exactly now dealing with the topic called audit evidence. Okay. We have seen at so many parts of the place that auditor has to obtain sufficient appropriate audit evidence, like that, right? Yes or no? What is audit evidence? We know, we have discussed even in our previous sessions also that audit evidence is nothing but information obtained by auditor. This audit evidence is 2 types. One is information contained in accounting records. Information contained in accounting records. And audit evidence also includes other information. One is information contained in accounting records, and another one is other information. Accounting records, this is one discussion in the standard. Okay, fine. Let me first give you an overview of the standard. And we all know, right, we need to obtain sufficient and appropriate audit evidence. What do you mean by sufficient quantity? What do you mean by appropriate quality? Quality. Now, appropriateness is dependent upon two things: relevance of the evidence and reliability of the evidence. We have a topic on relevance, we have a topic on reliability, and we have a separate topic on sufficiency, and we have a topic on what is information contained in accounting records, what is information, other information. Okay, these are the main topics in audit evidence 500 standard. Apart from that, we have testing, selection of items for testing. We have selection of items for testing, This is one where they talk about 100% testing, they talk about specific testing, they also talk about audit sampling, This is one topic. Then we have another topic, using audit evidence prepared by management expert. Using audit evidence prepared by management expert. When you are using that audit evidence, what matters you should consider as an auditor, what matters you should consider when you are using this evidence, and how do you evaluate reliability? How do you evaluate real reliability of management expert? Can you rely upon him? What factors to evaluate? Here answer is there, here answer is there. Both are different. Again, often students confuse between these two. Clear? This is one topic. Apart from that, we have in audit evidence general simple topics. What are simple topics? Sources of audit evidence. Okay, we know internal, external. See, I'm just giving you overview of the chapter, then I will enter into the chapter. Okay, internal, external. Nature of evidence. Nature is what? Oral, documentary, yes or no, and visual, yes or no. This is one. So this is one topic. Briefly, that only. Then at the end of the chapter, we have at the end of the standard, they even discussed a concept of audit trial. And there is most important topic, assertions. There is a most important topic called assertions. So now what is assertion? That we will discuss. First we will revise assertion means what. For example, in the balance sheet, there is a plant and machinery. They showed a breakup: 100 crore gross block value, 50 crore accumulated depreciation, 50 crore net block value they showed. Okay, this is how the plant and machinery is shown. You know what it is representing? You know what it is asserting? See, there is no specific, explicitly it is not saying anything, but impliedly it is saying some points. What? Since PM plant and machinery appearing on the asset side of balance sheet of the company, it means company is owning it. Means it is talking about company right over the asset. Yes or no? And they are saying specifically 100 crore is original cost, 50 crore depreciation, 50 is the balance value of the machinery. So the company is talking about its valuation. And they are showing this as on 31st March. Indirectly, the company is saying that is existing physically. What is it? It is existing physically on the balance sheet date. It is asserting about existence. What is it asserting about? Existence. It is asserting about existence. So simple, plant and machinery, 100 crore minus 50 and 50. This is what balance sheet is disclosing. But it is asserting about ownership of the machinery. It is asserting about existence of the machinery on the day. It is asserting about valuation of the machinery, and it is also asserting total plant and machinery is just 100 crore. Completeness assertion. Every item of the balance sheet, every item of the P&L will assert something, will explain you something impliedly. When a person draws this, when a person sees that plant and machinery in the balance sheet, he will say, oh, company owned this much. Another person might say, oh, value is this much. Another person might think this much machinery is there physically on the day. So people get different meanings based on the item you shown in the balance sheet. Auditor has to try to identify. What auditor has to do? Auditor has to try to identify what are all it is asserting, explicitly or impliedly. It is explicitly, they are saying the asset is plant and machinery. This and explicitly they are saying that it is plant and machinery. Impliedly they are saying it is owned by them, it is existing physically, it is valued at so and so, all the plant and machinery put together is this much. Impliedly they are saying this. Auditor has to draw, auditor has to identify what are all it is asserting impliedly, explicitly, and get evidence for everything. Now since it is asserting ownership, is it asserting ownership, right? I will ask original title deeds whether it is really owned by the company. It is showing 100 crore minus 50, right? I will say depreciation workings. And it is saying on 31st March they are saying plant and machinery. I will go and physically see whether it is physically there or not, and I will see whether all the plant and machinery is put together accounted correctly or not. Completeness. So audit evidence is what we need to obtain evidence about various assertions. See, again, many confuse between assertions is not equal to items of financial statements. Elements of financial statements or items of financial statements means plant and machinery is one element, inventory is another element, cash and cash balance is another element. Assertion is different. Assertion will be there for all of this. What are the assertion for liability, existence, obligation, okay, and completeness, and obligation, existence, and valuation of liability. For assets and liabilities put together, nothing but assets and liabilities are nothing but balance sheet items. In audit, we call balance sheet items as account balances. We call them as what? Account balances. What are the assertions for account balances? Look at. Let's see the assertion discussion. What are the account balance? What are the assertions for account balances? Look at existence, rights and obligation, completeness, valuation. So again, for P&L items, transactions and events, what are the assertions? Occurrence, completeness, accuracy, cutoff, and classification. What is occurrence? To know whether the transaction is recorded in the right, whatever the transaction recorded, did it really occur? So when I am checking overstatement, remember this particular concept is even most important in items of financial statements. In items of financial statements, every topic we have this discussion. Okay, so if you want to understand items of financial statements thoroughly, if you want to revise it quickly, you need to understand this thoroughly. So occurrence, to check overstatement, completeness, to check understatement, cutoff, whether it is accounted in the right accounting period. You need to check classification, whether it is recorded in the proper ledger account, yes or no. And accuracy, you need to check whether it is recorded at right amount. In a P&L item, purchases they show, is it really happened? All purchases accounted? Is it rightly accounted at right amount? And is it correctly classified under purchases? And is it accounted in the right accounting period? All these points I should check. Sales, all these 5 points I should check. Employee benefit expense, all these points I should check. So for transactions and balances, auditor has to obtain evidence for these 5 assertions. For balance sheet item, auditor has to obtain evidence for these 4 assertions. For presentation and disclosure, he should obtain assertions for these 5. So what is the nature of assertion? Tell me, what is the nature of assertion? Assertions in financials can be either explicit or implied, but mostly they are implied. Generally, assertions are not specifically stated, but they are implied. Sometimes explicitly also they will say, for example, secured loan. We are explicitly saying loan is secured, but we are impliedly, we are not conveying to whom the loan is given. We are not conveying that. Explicitly we are saying loan is secured. Are you clear? Assertions can be negative. Negative assertion means what? Saying that we don't have that. Saying we don't have contingent liability. Specifically, if you state that you don't have contingent liability, that's an explicit negative assertion. So negative assertion is again 2 types: explicit negative assertion, implied negative assertion. Explicit negative assertion means what? Saying that you don't have a contingent liability, you directly state it. Implied negative assertion is what? For example, there is a asset schedule, plant and machinery point is missing. Indirectly we are saying we don't have plant and machinery. We didn't say plant and machinery 0. We deleted that. There is no plant and machinery name itself in the asset side of the balance sheet. It is an implied assertion that we don't have plant and machinery. Negative assertion means we are saying we don't have it. Assertion means saying we have it. We did that. That's an assertion. We didn't do that. That's a negative assertion. Able to understand? Next. So ultimately the auditor has to verify the auditor has to base his opinion on overall representation of financial statements considering various assertions. All specific assertions you test. Balance sheet, 4 assertions for each item you test. P&L, all the items, for each item 5 assertions you need to test. Get evidence for all of it. Inventory, get evidence for valuation, whether valued correctly. Inventory, get evidence whether they are physically there. Inventory, get evidence whether complete inventory accounted. Evidence, inventory, get evidence for ownership. When ownership is with the company, valued correctly, physically existing, completely accounted, then you will assume that inventory is true and fair. Like this you do for fixed asset, like this you do for liabilities, payables, creditors, everything, receivables, everything. P&L items, you do the similar one. And that's how you do audit. You obtain audit evidence by testing various assertions in the items of financial statements. Are you clear? So that is assertion topic. Now again, going back to the audit evidence topic, I told you there are many topics in audit evidence. Now first of all, what is audit evidence? Two things. Information. Audit evidence is nothing but information used by auditor. Based on that he will take a conclusion, and that conclusion is the basis for the opinion. Now this evidence is two types: information in accounting records and other information. Accounting records means what? Invoices, entries, journal entries, ledgers, important contracts is also part of accounting record. Remember, MCQ can come. And worksheets and spreadsheets for cost allocation, this is also accounting record, and MCQ can come. And it also, audit evidence also includes other information. Remember, evidence is not just accounts. Only books of accounts is not we depend on. We also focus on other minutes of the meeting, external confirmations, internal control manuals like non-financial documents. This is also audit evidence. Now based on nature, we get evidence by observation, we get evidence orally. When we ask questions, when we inquire, they respond. That response is an oral, that's an evidence. Or they may give us a response in writing, that's documentary. Then again, evidence is two types depending upon source. One is internal evidence, another one external evidence. Which is, which we should obtain? We should obtain both. Both are complementary in nature. But remember, most of the evidence is internal, and substantial external evidence is also available. Yes or no? So internal evidence generally is in the control of the client management and staff. There is a chances of manipulation, so be careful. External evidence is usually more reliable because it's coming from third party. He don't have to impress you, so he will give you whatever is their right figure. But if at all there is a doubt about third party independence, be careful. Especially this point is applicable in case of related parties. When you are getting external confirmation from related party where you feel that related parties may not give right information, be careful. So as an ordinary rule, what they are giving you from outside and what is there inside, you should try to match it. They should match with each other. So as an ordinary rule, the auditor should match internal and external evidence. Further, there is one more source for audit evidence. Not only in the current year. See, we do audit procedures in current year. We get evidence internal, external, visual, documentary, oral. We can also get evidence from another source, some other source, and that is, for example, previous audits. Are you clear? Then, and remember, evidence must be sufficient and appropriate. Appropriate means what? Quality. Quality means what? The evidence that you are getting must be relevant. One is relevance of the evidence. For example, when I go to inventory physical verification, I get evidence about whether inventory physically there or not. I will not get evidence for ownership. If I want to get evidence for ownership assertion, I should check title deeds. I should check invoice documents. But when I check invoice documents, I will not get evidence whether they are physically there or not. If I want to get evidence on existence, I have to perform audit procedure called physical verification. If I want to get evidence on inventory ownership, I have to inspect invoices. If I want to get evidence on whether inventory valued correctly or not, I have to verify documentation, inspect documentation. So what assertion you are verifying, what evidence you are gathering, there must be link, and that link is called as relevance. Are you clear? So relevance means logical connection between audit procedure performed and the assertion tested. The relevance of evidence is influenced by direction of testing. For example, I want to know whether recorded sales are they genuine, did they really occur. Same recorded sale, wherever invoice you have a doubt, check in depth. Recorded sale you check, you will understand is it a dummy or real. So if you want to check overstatement, check recorded item, recorded item. Suppose I am skeptical, like there might be company recorded all the sales, but I am also thinking some other sales also would have been there. So I want to know whether all the sales are recorded or not. I'm not worried about recorded sales. I'm worried about unrecorded. What I should verify there? I should verify stock register. I should verify, sales orders, copies that the company received, orders received by the company, order booklet I will verify. This will give me an idea whether company accounted all the sales or not. So if you want to test understatement, unpaid invoices, supplier statements, order books, these are all the documents you should verify, not the recorded sale. So what assertion are you testing? Are you testing occurrence or are you testing completeness? Depending upon that, relevant evidence will change. Are you clear? Now, so audit procedure, they provide evidence only for certain assertions, but not for everything. For example, when you go and physically verify the existence of inventory, it will give you evidence about existence, but it will not give you evidence for valuation. It will not give evidence for ownership. Yes or no? That's it. Then reliability. Reliability means what? First of all, an evidence is reliable or not, it depends upon where you are getting from. It also depends on in what format you are getting it. So it depends on nature, visual, oral, written, or it also depends on internal, external. It also depends on what circumstances you are getting it. Are you getting it year end, during the period, or are you getting it in surprise visit? All that. Generally, there are some rules, there are some principles on reliability. Generalizations we call. Generalizations are what? Original evidence is more reliable than duplicate. Documentary evidence is more reliable than oral. Evidence obtained directly by the auditor by physically going and observing is more reliable than through inquiry. Yes or no? And if controls are effective, internal evidences are also reliable, and evidence obtained from external source, independent source, is more reliable. Remember, there can be exceptions. There can also be exceptions to this, but even though some exceptions will be there, generally can I say these are the principles of reliability? That's it. This is reliability. Next, when the evidence is appropriate, you understood now sufficient and appropriate. Appropriate means sufficiency and appropriateness means relevance and reliability. What is relevance? We saw. What is reliability? We saw. Are you clear? Now, what are various audit procedures? What are various audit procedures? If the question is what are various audit procedures, actually audit procedures are two types: risk assessment procedure and further audit procedure. Audit procedures are two types: risk assessment and further audit procedure. How do you perform these procedures? Inquiry, inspection, observation, confirmation, recalculation, reperformance, analytical. How I perform them? I may be performing them as a part of risk assessment. I may be performing them as a part of compliance procedure. I may be performing them as part of substantive audit procedure. Substantive procedures. I may be performing them as a part of substantive procedures. Anyway, I can perform. In all these procedures, I can perform as a part of risk assessment, as a part of compliance, as a part of substantive. Now, what do you mean by inquiry? Inquiry means what? Inquiry means, just a minute. Yeah, below it is there. Methods of obtaining audit evidence. Yeah, here it is there. So, inquiry means what? Seeking information from knowledgeable person, maybe within the organization or outside. You are asking either in oral or written format. Because of inquiry, what you get? What you will get? You will get new information, or you will get information that is different from other information, or based on inquiry you get some response rate that may help you to modify the audit procedure, or that may make you to perform additional audit procedure. Yes or no? And auditor can also sometimes ask written confirmation for inquiry. When you ask question, management gave orally, you may insist on them. No sir, please give me in writing. And that is called, when management is giving in writing, we call it as written representation. Are you clear? Then now inquiry. What is inspection? Inspection means what? Physical verification of an asset, or inspecting documents and records. Example, what you will inspect? You will inspect authorizations, examples. You will inspect contracts, whether company is recognizing correctly or not. Revenue. You will inspect tangible assets. Inventory for physical verification. You will inspect inventory items. So these are all examples of inspection. Observation means what? In SA 501 I told you, the auditor has to plan attending physical inventory count performed by management. And when you attend there, first point, first understand management methods to observe whether those methods are properly implemented. Observe means what? Looking at a process. By looking at a process, you can get evidence. Example, DMart example. I went and stood at one corner of the store and observing how salesperson is billing the goods, and I noticed that customers are taking some small tiny items in the trolley without billing, and I thought, I'm waiting whether security guard will figure it out or not. He is also just taking the bill and stamping and going. Now I got an evidence that controls implemented by the company are weak. Are you getting it? Here I got evidence through looking at the process, observation. So observation means what? Looking at the process. But in observation, one downside is what? Only the point in time when you're observing, evidence will be there. Once you left the store, what is happening, you don't know. Yes or no? Then external confirmation. We already discussed one standard. We already revised it thoroughly. 505, external confirmation. Then another way you can get evidence is recalculation, depreciation, stock valuation. You recalculate and check once again whether they are correct or not. Reperformance. Reperformance means what? For example, I want to know whether control is effective or not. Whether all the goods in a DMart, customer is bringing goods in the trolley, whether all the goods are billed or not, I want to know. One is I can observe and see. Another one is what? I will ask security guard to sit aside, sit for a few minutes. I will check there. When the customer is bringing out the trolley, I will open all the goods and I will take the bill. I will see whether each item is billed or not. In this way also I can know whether control is effective or not, whether employee is working correctly or not, whether employee is billing correctly or not. I can get evidence through this also. That's called reperformance. Example, a control which already performed by management. Once again I'm performing the control to know whether control is effective or not. That is reperformance. Then analytical procedure. Analytical procedure means analyzing relationships. P&L account shows profit. Cash flow statement shows negative cash flow. Why? Why it is inconsistent? I investigate. And to know, when I investigate, I may discover there are a lot of credit sales and collections from debtors is very poor. So that is why profit P&L account shows super profits, but cash flow statement is negative. The reason is credit sales and slow collections. Now I will see whether management made provision for debtors. I will cross check. Through analytical procedure only I will get to know that. Are you clear? Next. Now again another important question. Timing of audit procedure when information is in electronic form. In almost today every company, books of accounts are completely in electronic form. Yes or no? The audit procedure's nature and timing will affect if the accounting data is in electronic. Tell me, the way you do audit, the time at which you do audit will be different if at all books are in manual format and if the books are in electronic format. Because sometimes information will be there only at specific points of time. Information may not be there later on. For example, you want to know DMart sales invoice breakup, you want to know. It will not be there after 10-15 days. The company will delete the data, but they will retain invoice number, invoice date, amount, at what time it is sold, whether customer paid to card or cash, that time that data will be retained. Breakup of the goods sold will be deleted. You want to verify breakup of the goods sold in DMart. Suppose you are an operational auditor, you want to verify breakup of the goods sold. You have to go within 1 week period only. If you want to verify sales related to 10th March, you have to go by 17th March and verify. Only then 10th related sales you can figure out. Then some electronic information you can't retrieve, either because files were changed or backup files were not there. And due to various retention policies, it is advisable for the auditor to visit the company at the time when the data available, or request the company to retain it for auditor's review for certain period of time. So when the data is available electronic form, it is influenced by company's data retention policies. At that time, you request the company to retain it for some more time so that auditor can review, or at the time when the data is available, you go and review. So this is how the nature, timing of audit procedures are influenced when the data is in electronic form, when the accounting records are in electronic form. Are you clear? Yes or no? Now sufficiency means what? What do you mean by sufficient appropriate evidence? You know what? In September 25 attempt, they asked this question. Here you just add size and characteristics of population. Please add size and characteristics of population. If at all any of you are following my 25 notes or 26 notes, whoever, please add it. Now, sufficiency means what? Quantity. The quantity of evidence is affected by directly 2 points. One is risk involved and quality. Higher the quality, lower the quantity. Lower the quality, higher the quantity. Risk, higher the risk, higher the quantity. Lower the risk, lower the quantity. Further, it is affected by three more factors where risk of MMS is repeated here, where with detail. Risk of MMS, the risk that financials are materially misstated prior to audit, which includes inherent risk, which includes control risk. Inherent risk means what? Obviously, in any business, in any process, some mistake will happen. To prevent that risk is inherent risk. To prevent that risk, company implemented a control so that that risk will not happen. But this control is not working effectively, and that is control risk. Are you clear? Next, materiality. Higher the important, higher the more evidence is required for more material assertion. If the assertion is less material, least evidences. Size and characteristics. Smaller population, less evidence. Homogeneous population, less evidence. Larger population, more evidence. Heterogeneous population, more evidence. Heterogeneous means what? Different variations in the population. Are you clear? So these are the factors will affect sufficiency. Appropriateness is influenced by relevance and reliability. Are you clear? Then next, almost I am covering almost all the points I'm covering. Suppose, if at all, you are using audit evidence, which is information prepared by management expert. Before you use that, no, you first evaluate reliance on the management. Can you trust him or not? You should evaluate first. Because no, management expert period. First of all, who is a management expert? Lawyer is a management expert. Architect is a management expert. Actuary is a management expert. Company's internal chartered accountant is there. He is not management expert. Why? You know, expert definition says any person used by management who has expertise in any field other than accounts and audit. Accounts and audit, from our point of view, they're not experts because that's our field only, our domain only. From our point of view, experts means what? Experts in some other field other than accounts and audit. If it is accounts and audit issue comes, I am there to verify it. But if it's some other issue, actuarial liability, environment liabilities, yes or no, and contingent liabilities, whether it's a contingent or real, lawyer only can tell you that. So experts assistance is required at so many places, yes or no. So if the evidence that you want is prepared by expert, before using that evidence, you first see whether you can place reliance on the expert or not, whether you can trust him or not. For that, you can check, is he competent, is he capable, and is he independent from the company, unbiased, objective. Then check understanding of the work, what work he is doing. Is that work appropriate for your audit checkout? Once you understood, yes, expert work is relevant to me, you decided to use the evidence given by him. Expert gave a report on inventory valuation. You decided to use. Now, your nature, timing, extent of audit procedure will be affected. You know, your nature, timing, extent of audit, because now you are deciding to use expert's work. No, which means now you need to interact with expert. All that means your audit procedures might change. Yes or no? Because of various matters, complexity of the matter, risk involved, whether he is employed by the entity or engaged as an outsider, whether management is having a control or influence, is he following technical standards or not, what is your knowledge on that field, what is your experience with that expert work. All these matters are relevant when you are using information prepared by the auditors, by the management expert. See, there is another concept called auditor's expert. This auditor's expert concept is there in CA final 620. So this expert related discussion in depth will be there in CA final. Clear? So this is regarding expert. Then finally, how do auditor will select items for testing? It may be controls testing or it may be details testing. There are three selection methods. One is selecting 100%. Means of selection. These are means of selection. There are three means of selecting. Select 100% or do specific testing or audit sampling. So audit sampling means what? Drawing sample from a population on a random basis and forming a conclusion on the population based on the sample result. What is selecting 100% items? Either you select 100% of class of transactions, 100% of account balance, or 100% of a stratum. Stratum means what? You might have heard in stratified sampling, like, you know, entire population, I divide them into subparts. For example, all the expenses of the company, I divide into three types. Example, operating expenses. In a bank, you see, the expenses of a bank are divided into three types. Operating expenses, provisions and contingencies, and interest expense. In a bank, the expenses are broadly divided into three types. Interest expenditure, contingencies and provisions, and operating. And select from each of this sample, that is stratified sampling. Suppose you are selecting only one item fully, that is stratum. So verifying 100% of stratum, that's called 100% testing. Verifying 100% of class of transaction, entire interest expenditure, that is 100% testing. Are you clear? 100% testing is suitable when when there are small number of transaction of large value items, or when there is a significant risk is there, or these calculations can be performed with systems automatically, which is cost effective. That time you can do 100% testing. Specific item testing. Specific item means what? Judgmental selection. Auditor will, based on his judgment, he will select. I will test these transactions, I will not verify these transactions. Judgmental selection, which is based on understanding of the entity, assessed risk, and characteristics of the population. Remember, judgmental selection is subject to non-sampling risk. What is a sampling risk? What is a non-sampling risk? In sampling topic, you will understand. Okay, sampling risk and non-sampling risks are reasons for detection risk, which is a reason for audit risk. In my YouTube already there is a full chapter on risk assessment. You can watch that to understand what is detection risk, what is sampling risk, what is non-sampling risk. All that there is a session. You can watch a full-fledged, my proper regular course is uploaded. It's just 6 hours that chapters. Next, so judgmental selection means what? Selecting all high value items. I will ignore low value items. I will select items above 1 lakh rupee. Selecting specific item, selecting items over a certain limit, or selecting an item to understand the entity or transactions. This is called specific item testing. Are you clear? That's it. So that's it. Audit evidence topic is over almost. Then trial, audit trial topic. This also I will briefly discuss. What is audit trial? In a company today, accounting softwares are designed in a way where when a person enters a transaction, who entered, at what time they entered, what they entered, at what amount they entered, everything will be captured. Later, if the same person modify the transaction, he modified at so and so date, right? At so and so time he modified, right? That also will be captured. Later, this fellow deleted the transaction. This fellow deleted the transaction, right? The fact that he deleted will also be recorded. Which means anything you do in the software, everything is recorded. A log is maintained. A log is maintained. So this is called audit trail. For example, in all of your phones, you can track your usage of the phone. How much time you spent on Instagram, how much time you spent on YouTube, how much time you spent on so and so app, you can track. That's a tracker. That's an audit trail. Audit trail is like an audit track. It's a tracker. Are you getting it? So audit trail is a documented flow of transaction. See, accounting software records all the transactions. The flow is recorded in audit trail, okay, which will help to trace a source document to a journal entry, from journal entry to financials. Remember, in audit report topic, we might have seen 143 subsection 3. Yes or no? At the end, last 16th matter inside that, the auditor has to comment whether the company is maintaining accounting software that has a feature of audit trail, and the software and the feature is not tampered, and the audit trail is retained for the record retention period of 8 years. We need to comment. Auditor has to give an opinion. Now, what is audit trail? That is what they're saying. Audit trail is a flow of transaction that helps source document to journal entry to financials. The purpose is, it is an audit evidence to establish authenticity and integrity of the transaction. Audit trail is a step-by-step record that traces accounting, trade, financial data to its source. Audit trail. See, I told at the beginning example, right? Why a transaction is deleted? I want to know why a transaction is deleted. Okay, first of all, if audit trail is not there, I don't even know that during the year there is some transaction entered and the transaction got deleted. That item, that information I will not get to know if audit trail is not there. If audit trail is there, I will open audit trail option and I will generate a report. It will directly show me give me a big report where and all original transaction what, revised transaction what, original transaction what, deleted transaction what happened. I mean, what they deleted, everything they will show me. Then I can ask management why you changed it, why you deleted it. So I will understand the effectiveness of internal control system. Are you clear? So audit trail documents evidence of every event that is happening to reduce frauds and errors. But remember, maintaining audit trail is costly because lot of data accumulates in the system. Storage expenditure is very high. Yes or no? Time required. It takes lots of time to analyze data. But nothing to worry. There are some automated tools which will analyze this audit trail data. What are the benefits of audit trail? It will enhance internal controls. Now accountant knows that everything what he do in the system, everything is recorded carefully. So it is a control, it's a preventive mechanism. And audit trail helps to identify reasons for a problem. For example, some debtors account shows debit balance. sorry, debtors account shows credit balance. How come a debtor account shows credit balance? I will go back into the system deep down. So where and all it resulted in debit credit balance. Why debtor account shows credit balance? I can see, I can trace out the error easily. And systems where audit trail feature is there, auditors will have a confidence. I will have a confidence that okay, whatever they recorded, they are not manipulating later. Okay, then they will verify whether transaction was performed by authorized person or not. I can see who passed this entry, name of the person who passed the entry is recorded, his employee ID is recorded, everything is recorded, and it will enhance data security and reliability of evidence obtained during the audit. That's it, audit trail. So 500 major topic is covered, audit trail topic also briefly covered. Clear? Almost we spent 40 minutes on 500 standard. This entire chapter we spent almost 2.5 to 3 hours on revision till now. Okay, there is still 530 standard, 520 standard, but I just kept them under 1/4 priority, which I will discuss in the revision later. Clear? Confident? That's it. With this, in audit evidence, predominant topics we revised. This whatever 6 standards that we revised, they will have a weightage of 20 marks, 50 into 20 marks. That's it. Yeah.